Rage on that beat, going crazy.
Oh, hello. Good morning. Good morning. Yeah, let's see what's going on here. We have $5,000 trading above $5,000. Expecting price to sell. That's what I'm going to wait for. Now the daily time frame is also down 0.64%. So I think, got to take our first trade here of the week. It's probably going to be a sell. Just need to wait for something to set up here. I hope everyone had a good weekend. Catch up with markets here. Today we have the USD bank holidays. So bank holiday, US dollar. Let's see what's happening over there. Observance of President's Day is today. So yeah, that could affect potentially the NY session. Got claim count change for the pound today. What else we got? What else? Well, I think that's about it. Yeah, it's a pretty chill day here today. We don't have any folders to really look out for. Not sure if anything came out over the weekend. I haven't done any due diligence on fundamentals over the weekend. I didn't see anything. Usually something will come out, then I'll probably just see it anyway. But gold supported by US rate cut expectations. Gold traded back to $5,000 a troy ounce after getting a boost from weaker than expected US inflation data. This raises bets that the Federal Reserve will cut rates. See, swap traders are pricing about 50% chance of a third rate cut by December. Ooh, that's gonna be interesting. Three cuts would be nice. Rate cuts will support inflows into precious metals. Gold still maintaining bullish structure. And we have gotten into a daily consolidation. Quite a healthy consolidation here. As we gotta see, boom, price broke above 5k. And now it's like kind of a ranging over here. We got resistance, we got support. Slightly kind of like barcoding. So that was inevitable. Right? That was inevitable. We kind of anticipated it. We all kind of expected it for a while now. After having so much volume that eventually will consolidate. Intraday timeframes I think still look pretty fine. The breakouts still seem to be pushing quite a bit. This daily here, only thing that's annoying, it doesn't have a top wick. There's no top wick, but yeah, I think this would just be like a daily bottom wick. And for the rest of the week, you can possibly expect something of the sort like this. Right? Start breaking above that resistance. And then price to keep moving upwards towards 54.40. So that's going to be the analysis for the week up ahead. So now we just got to wait, monitor markets, see what the markets do, and react accordingly to whatever direction that it chooses to go towards. Right? But right now we are seeing a lot of selling pressure in the market. See like these nice little swings here. This is from the Asia session sell-off. We're back down to 0.73%. The sellers are eyeing 5k. The sellers want to take over 5k. Look at how close we are to 5k. Sellers want to take over 5k. So I'm going to wait for some kind of a sell confirmation. It will be nice. Especially if we are trading under that 5k mark. Hey, good morning. Good morning, Woods. Oi, oi. Yeah, let's get it. So far, so good. I mean, the market's not ranging. Even though it's a USD bank holiday, we're trading the London session here. It seems that price is still moving. Maybe a bit of choppiness here and there. But yeah, I mean, price is still moving. Just gotta be patient. Sellers took over 5K. Sellers have taken over 5K. Gotta go through that 15-minute SMA there on the 8 SMA. 30-minute, we got clean range for candlesticks to keep coming down. Have a range of, like 200 pips almost. Hourly candles are good. Just got to get through those SMAs. You have like some dynamic support there. We retrace it. You know what he was trying to do, chat? Like, you're just trying to fill this range right over here. That was just like a range that it's trying to fill. Let me see how much of that range it did. Close to 65. But yeah, it's been trying to fill this range here. There's still a lot more room for it to move up. We got about like 107 pips above resistance here by 50.10. Yeah, it's pretty obvious big range you can see. So I think, you know, got some buyers in, but well, I'm anticipating that might be a pullback. Fundamentals seem to be quite supportive of gold spot to move bullish though. They say we still have bullish structure, which is true. Remember, we still got bullish structure. Just because you might think this is a new lower low right over here, that's not the case. You know, there's a difference between what you also see and your experience with the instrument. Like, you've been trading for a long time and you understand like what's moving price, then you understand that this is not necessarily like a change in direction yet. Correct? Like, obviously markets are going to create new lower lows. Even in trending market conditions, it can happen, but it is nothing that should say gold should really sell off here at this point. And that's why I think, you know, understanding those fundamentals are like really important. So it's still quite early to speculate on potential reversals at this point. It's got a new lower low, but that doesn't mean nothing. We're just accumulating here. Because remember what happens, chat, like we normally accumulate before we see some kind of a break of structure, some kind of a continuation. So that's what it's doing over here. It's just getting ready for the next episode. And then I think it's going to look pretty nice. If it sells off, there's going to be a lot of support areas it needs to get through. It's a lot more, there's a lot more resistance towards the sells than if price just moved up bullish. So if we move up bullish, we just get through resistance by 50.91 and it's smooth sailing at that point. Gonna have some tailwinds up towards like, you know, 54.50 over there. 54.50, yes. And then attempt to go for the all-time highs. At that point, I think the macro fundamental space should also get interesting. You tend to see like markets a bit of ahead of reality sometimes, where as we start to move up, we might start to see some more interesting headlines come about. Maybe Trump's gonna do something or something's gonna happen. But you see, as of right now, we don't have any interesting headlines. There's nothing. Gold is giving back some. It's just all about the red folders last week, so everybody was waiting on that jobs data. And now that it's over, we're gonna need some fresh news. So depending on where price goes to next, we shall line that up with the market. We'll line the fundamentals up with the market as it unfolds. Let's see, it will likely require the dollar to resume its downtrend for gold to make a push in the direction of 6,000s by the year end. On the geopolitical front, the US military is preparing a possibility of a weeks-long operation against Iran should Trump authorize an attack, 2 US officials told Reuters, in what could become a far more serious conflict than previously seen between the countries. Yeah, I feel like that's going to be the catalyst. That's probably going to be the thing that kind of escalates gold's PA over there. We're going to see some escalation in Iran. That's probably going to be it. Now we wait. Buys taking back over 5K. Just flirting with this psychological mark over here. That's the most important level for today's trading. As of now, 5K. Volume is so slow now compared with other weeks. It's normally, yeah, exactly. Yeah, true. It's a bit slower. It's definitely a bit slower. I feel like the pushes can still come in though. From time to time, I'm seeing like small push, but it's definitely slower. Yeah, it's slower compared to other weeks. It's normal. We don't want normal. Yeah, going back to normal, man. We're going back to normal slowly. But you know, I don't know. Like, we're just accumulating now. We know that price is gonna keep moving up, but yeah, it's like the first phase of normal. Let's say it's the first speed bump to normal. But I still think we got a long way to go. Yeah, let's see what silver's done. Silver is also bearish on the day. Down 0.65%. Let's clean up some of this analysis. Silver pushed down. Let's say that was Thursday. Friday created a support. Yeah, again, nothing too interesting on silver. It's ranging from this is a daily resistance up here. That's the daily support. This is the range that's overall holding. Silver needs to break above 89 here to keep moving up bullish. So it's also just ranging. Let's see on the 4-hour. 4-hour looks clean though. You got 4-hour resistance here. Looks like you could get some kind of a breakout situation for price to come up towards that level. Or silver right over here, really nice range to fill in the 4-hour. I think buys are gonna be in order. Because silver and gold moving the same way, so just waiting for price to actually break above on the 1-hour to refine. You have this clean range that price can fill up over here. See, it's just accumulating. It's getting ready for the next move. I know, like gold, feel like you kind of want to push upwards a little bit here, but I'm looking for sells. Yeah, but that's a 30-minute on silver. Looks like it wants to break out, and basically you're just trading a range, right? Like right now, if you're taking any trades lower than the, let's say, hourly candles, then you are just trading this massive range. And since price already tapped the bottom of the range, would be expecting that it can come back up to retest the highs. But I think something like silver, if you take a buy expecting a long position, that's most likely to play out, rather than a sell expecting like a longer sell position. And given the overall support for commodities at the moment. You backtested NQ, you considering it? See what NQ is doing. NQ is stuck on that weekly, so it's also just all markets are kind of in a range right now. It's what is the second month of the quarter? All markets are slightly range bound. Also NQ is range bound over here. Well, I think markets are waiting for that. Overall, we're waiting for June, July overall. First rate cut decisions. But yeah, NQ is also range bound there on the weekly. 4-hour also looks good on NQ to actually move up a little bit here. Like it's the same as silver. Same PA as silver. Just needs to break above that resistance over there. It's gonna be heading up. It's gonna want to fill that range. These are much higher time frame ranges. Like they're much cleaner seen on the hourly time frame. The candlestick starts to break above. Probably gonna see it come up there. At least there's a ranges more towards the buy side. It's kind of interesting. We've been getting a lot of sell-offs. That means of silver, NQ, and gold. Because the ranges look a lot more appetizing towards the upside, even on gold this morning. But the price action towards the downside is not as clean. Small little liquidity grab on the 5, potentially. Starts to reverse back down. Yep, so I'm going to wait and see for price to come down. I want to see price come down like this. Create me a support. And then maybe look for a sell below the 5K mark at around 49.95, which is also going to be quite nice because we're right next to 5K psychological. So that would be like the first sell entry confirmation under 5K psychological. So yeah, that's the kind of a confluence I think is going to be good. We'll see if it comes there. It might even come a bit slightly above. And then 5K would be like the entry point right over here, the break of the lows. But I think the market's going to set up. Hopefully we get some volume in today. Some really nice bomberclad trades.
Bomberclad!
Already up for the month over here, about 30%. So I think, you know, it's been a pretty good start. As we're going into accumulation season on the HTF, I think it's nice. Now just got to maintain discipline. Yeah, that's what we gotta do. We have to maintain discipline. I'm thinking about maybe take a sell below these lows. What do you think, Ricardo? Would a sell be here good if we create a resistance? Or would it be better to wait for something down here? Like if you create a resistance like this, how do you feel? Gonna look something like this. I think we should do it. That's how it's gonna look. I need to change the time that we do our simulation sessions. I need to figure out how I can make it in the day, like a bit earlier. I need to restructure my days somehow. I need to restructure. Because I know y'all are not going to show up to them at the usual times. So we got to do it earlier. Alright, so I'm thinking about a sell if price comes down and breaks these lows right by that 5K mark. Yeah, we'll see. We'll see what happens here. 5 minute candles are still pushing bullish. Liquidity grab confluence potentially over here. See, I just took out the highs. Potential liquidity grab. See if it can come tumbling down. The 5 minute also doesn't have a bottom wick. 1 minute 40 seconds for 5 minute closure. What else we got? SMA. Yeah, I mean, it's trying to pull up a little bit. There's quite a bit of selling pressure, so it's trying to pull up a little bit. But I feel like it shouldn't be breaking below like 5,000 over here. If it still wants to move up bullish, shouldn't break 5,000. Should start like respected. Let me remove this. I don't like doing analysis because it just keeps my bias a bit too fixed. I prefer to use naked charts, you know, but just for demonstration purposes here, we're gonna draw something. Let's see, faking out. Candlestick freaking close above that resistance. Not ideal, not ideal, not ideal. Yeah, that's not ideal. We might need to see this thing come down, create a potential support. The lower spot feels better, in your opinion, down here? Yeah. It does now, for sure. These candles are still pushing. They're just trying to get through that level. Yeah, it's, for right now, I'm gonna wait. I think this is gonna be invalidated here. Unless price now starts to come back down. Somehow retest this zone by 1 minute resistance and then comes down again like this. Probably consider it. Then that would be the fake out area over here. It's trying to push up. It's struggling, but it's trying. But you know, it would be nice to get a few more sells for the London, because we already pulled up pre-London, and get some sell continuations for the London. And then later pre-NY can start making its way up for that daily top wick. Because I am not looking for any buys at this moment. Price, when you look from the 5 minute, just moving up. It's drawing liquidity. That says like pretty strong pullbacks. And then pushing back up. So it's looking for liquidity. I feel like it's just one of those days. Can also see it here. You see the wicks? It's breaking. It's coming super close. Breaking, pulling up. You got this candlestick body here. Break, even a smaller liquidity grab down here. You see, it's just fine. It's looking for order sellers to keep pulling up here. It wants to correct this range here. It's really forcing issues. I think people just want to get stuck in buys earlier for some reason, because that daily doesn't have a top wick. So they got better prices by 5,000 psychological. The sells actually kind of stopped. The closer we were getting here, like by midnight Eastern timing, where we got that liquidity grab. That's when the sellers were kind of out of the market. We haven't seen them fully come in yet. We thought maybe we could see them come in with this candle right here. That small liquidity grab to the highs. But if that section still gets respected, you know, possibly see some further downside. Would be nice if we had a lot more volume. Candlesticks were a little bit bigger. See this range from here to here. Yeah. We just need to be right for a minute. Just need to be right for 1 minute. That's it. Just 1 minute. Ideally, it's always up to the market. You know, the market will decide how long that will take. Like it could cook something up here as well, like a small little reversal play on this area. Bro, I need your WhatsApp. I don't share my WhatsApp. I don't have public WhatsApp. We got a Telegram. We got a Telegram. We got a Discord. Four-hour and 1 hour are still bullish, creating lower highs. Still need a higher high to be created though. Yeah, if you're trading the 4-hour, then you're gonna be waiting a while over there. Gonna be waiting. But my broker, it says we got 2 hours 24 minutes till the 4-hour closure. And this would be the high that needs to be broken on the 4-hour by 50:39. So it's still got to push up there. You can just go back to bed. You're trading the higher time frames. That's the luxury of the higher time frames. Sometimes that you gotta just like know how much longer you're gonna wait. But with the lower time frames, ooh, you're gonna miss it like really quick if you're not on the chart. But it's also better. It's better like that because like each hourly candle is gonna give a move. So what you have to do is sit on your hands and just make the best possible trade that you can do for this hour candle. That's where all your capacity is going towards. It's like, how can I, for this hourly candlestick, make the best possible decision that I can possibly make? Because there's gonna be a trade, you know, let's say around 1 or 3 trades. Let's just give a range on average 1 or 3 trades. 1 or 3 of those moves are gonna be winning moves. You know, so you gotta see which one is it. And sometimes it prints the one which is a winning move, but it's not clean. You know, because the market doesn't necessarily also know what strategy you're using. So it'll just move and kind of give you the setup, but not exactly as clean as you want. But you can see some variable played out. Then you got to take that in consideration. So that's all that we're trying to do here is we're just trying to catch this hourly that's about to close in 23 minutes. That's all that I got to do. You see, it's not even moved yet. It's still like a doji. That means it hasn't been a move on the hourly. See how it's hesitating here? Look, you see how that hourly is like a doji? It was like a doji, and you see what's going on the LTF? See how it's still kind of like indecisive over there? You see how it's chopping up and stuff? Because we're just trying to catch that 1 hourly candle clean move. That's part of the rules. You know, some days are easier than other days. Right now, this is not the easiest straightforward type of day for sure. But we shall see when the market gives the entry how clean it looks. But some other days are so much easier where there's clean volume and price is just moving in your direction. Today is slightly a bit choppy. There's a bit of liquidity grabs that are happening on the bias side, which is a bearish bias. It's a Monday over here, you know, market's still setting up. People like to say that. So I think, you know, it is what it is. Market's still setting up. The market's also got to stretch its legs, you know. On a Monday, it's got to get out of bed, stretch its legs, get ready, eat a nice brekkie. Its market's also got to get ready. Right now, it's drinking some orange juice, reading the newspaper. Hopefully he's about to head out. When he heads out, the volume should be coming in. Bank holiday? Yeah, it's a chill day for Mr. Market today. Mr. Market is working every day, but, you know, today is a little bit more chill for him. So it's gonna take it a bit easier. He's working half a day today. From now up until the New York session. think that's what's going to happen. All right, so price is not giving by that entry. Thought we were going to get an entry over there. Nice little sell. That hourly tried to reflip bullish. It's a real battle between the buyers and the sellers right now. As you can see, that hourly, how it's really struggling up and down. You just got to focus on this candle. You know, most of the time you have to focus on the most recent, which is like the current candle. Like all this price action back here, it's all well and good. But we got to see and focus on like this candle. You see how it's fluctuating? Because how are you going to trade this? Because this is what you're catching, right? You're not catching things that already happened in the past. Unless you got a time machine. But this is what you're catching. So when a candle is moving like this, there's nothing you can do about it. Even if you have like an A+ setup, these are the current market conditions. That's what's currently giving you a winning trade or a stop loss. It's this current candle and how it's behaving. Every moment in the market is unique. So right now we're still waiting for that signal that's going to show like some kind of a volume. Or like decision, you know, some kind of a decision. It's Carnival's Monday. China, USA, and others are closed. Hopefully we can get some Monday blues here today. Yeah, I feel like this could be a potential range that we're breaking into, which is going to be, now that's going to be the low and then this going to be the high. So we're in a range here of around 175 pips. See, just a bunch of noise over here previously. Yeah, it's full holiday mode here in China now. Lemmings everywhere. Yeah, that's, I mean, you know, the funny thing, like with traders, you don't really get public holidays, right? Like you still kind of like, you can, but because the trade in London session, I feel like most public holidays coming in during, anyway, I don't know, but I always find myself trading a public holiday when everybody's at work. Well, I think on the upside is that, I mean, when everybody is on holiday, but I think the upside is that we get to choose what days we wanna work for the most part. Alright, just waiting to see. Maybe get a resistance form over here by 5,008. And then... Now, could we take a sell? We could take a sell. We gotta break out of this area. This is like choppy weather, right? So this is like, you gotta imagine really stormy conditions right over here. And then we got some lightning. Like this. That's currently what's happening here. It's very stormy. And we're flying the Cessna plane, and we got to decide, are we going to go through this storm? Should we go through this storm, or like, we got to see an opening. We got to see the clouds part ways. And when the clouds part ways, then we're going to get our opening here, and we got to go through it. Around the lightning. Gonna get a little bit of turbulence there in the middle. But we should be able to get out quite fast before the clouds come together like this. That's what we have to do. Right now, there's no route to take. So we're going head in first. We're going head first for that cloud. But when the setup forms, that's gonna be the parting of clouds. Then we're gonna see if we can get through it. You know, life is all about taking those chances, right? In trading, you're a pilot, you know, whatever it is that you do, life's all about taking those chances. So you just have to find the best possible chance that you can take at that current moment. You know, and then you look at that trade and say, could you have done anything differently? You know, because sometimes we blame ourselves too much and say, oh, you know, I shouldn't have done that. But you wouldn't have known, because at that very moment, that was the best decision that you could have made. So you just sometimes have to be honest with yourself. And that's why it's important to not second guess your trades either when you do take a position, right? So every time you take a trade, you have to take a trade which is a clear trade to understand. So you don't play that victim card of, oh, I could have done this differently, or I shouldn't have done that. Because you never know, you know, you did it already. So then who are you gonna blame? You're not gonna blame your mother here, or your spouse. You only have you to blame if you take the dumb shit trade. So you gotta wait for price to set up the way you want to see it set up, execute, and accept the outcome. A lot of trading is all just about accepting the outcome. You know, you have, the moment you take a trade, actually what it is that you should do as a trader is accept that you have already lost the money. The moment you take a trade, you're risking 20 bucks, 500 bucks, 1,000 bucks. Accept you've already lost the money. It's gone. It no longer belongs to you. That should be your mental model every time you're getting into a trade. Not that you're going to make money. You're thinking, I'm going to lose money. Yeah, it's paradoxical because nobody starts a business to lose money, correct? But you see, that's where you go wrong. You go wrong thinking you're going to make money because now you're too focused on the money that you're not seeing everything else. So you kind of got to do the opposite there. And then just keep letting the probabilities of your system to play out. If it's a winning system, then you don't have anything to worry about one trade. I'm thinking about a sell over here. Definitely not like my cleanest setup because of that wick. That wick there is pretty long. That we got to get through that wick. But you see, this is a kind of like opening as a pilot over here. We've seen a potential opening of the clouds, you know. The clouds is giving like a very narrow opening over here. It's a chance. It's a chance that we got to take. Could definitely look a lot cleaner. Let me see what's going on the 5 minute. The 5 minute will be re-breaking the lows. At least the 5 minutes clean. We have rejection wicks towards the highs right over here. So we got multiple rejection wicks on the 5 minute. This candle will be reflipping and breaking the previous 5 minute lows. We have that 8 SMA there on the 5 minute, which can give a bit of turbulence. We got clean traffic at the break of the 15 doji. The 30 minute will be reflipping and breaking its lows. That's where the entry is going to be with a 30 minute resistance right over here in rejection wicks. So I think even based off the 30 minute, all right, it looks like it's coming in. I'm going to look for a sell right over here. Got a head and shoulders pattern in there too. Oh wait, should it, is it actually clean? Boom. Now let me see what's going on here. We got do. Oh yeah, it is. It's like a fake out here and here. I believe that's what it is. This candle's got to be the one that breaks. Five minute retested the highs. The 5 minute is flipping down. I want to see this candle here break. All right, so I did take my sell over here, anticipating that price can move down. That was a strong break on the 5 because that 5 retested that area already. So I wouldn't be expecting it to go back up. You see on the 5 minute right here how it's re-breaking. It rejected resistance. and then it reflipped down. So I wouldn't be expecting that this candlestick would now reflip back upwards. That just wouldn't make any sense to me. So I think, you know, that's going to be the move here. We got clean traffic as well for price to continue coming down, even towards that $5,000 mark over there, psychological. Just need to get, oh, 8 SMA is still holding price. Damn, we didn't manage to close at 8 SMA. This next candlestick opened below it though. See any, no, nothing there. Go back on the 1 minute. Yeah, this was the liquidity grab right over here. That was a liquidity grab. That was accumulation with a little head and shoulders. So we got a little liquidity grab. This should be the thing that pulls it down. It shouldn't be doing 2 liquidity grabs here. Since we've already picked a direction. So just gotta wait and see how this plays out. See if I can reduce my risk. Depending on what kind of like structural forms. We got a new hourly candle that's about to open up soon. This hourly candle has also not really had a move yet. This should have continued to move down over here. Pulled up, kind of giving me a hard time. So we got the SMA confluence still on the 1 minute time frame. Oh, come on, Goldie. We already tested those highs. It's going back into the accumulation. Hopefully we can get more sellers involved to push price from just that general area there. We've seen market come really close to stop loss before and just completely reject those areas. So this is a point in time where you just gotta be very cautious. Looks like on this trade I wouldn't be able to reduce risk because of the pullbacks, pretty strong pullbacks. The only closest thing to that I can get is maybe a break even. So hopefully that's just that 5 minute creating that top wick again, which it shouldn't be doing because we already retested that zone multiple times. But hey, you know, that's what trading is at the end of the day. But you know, probability wise and price action wise, it shouldn't be coming even back up there. We should at least get a push to the downside. Before any like immediate pullbacks. Oh. Come on, sellers. Somebody sell 50 million worth of gold right now. We got 5 minutes. That's about to close right now in about 40 seconds. It's waiting for the new 5-minute potentially. We got a few seconds, like 20 seconds for the new 5-minute. I think I would hit a break even if it re-breaks the lows. Oh. All right. Yeah, I have to close my position there. Couldn't wait for that new 5-minute open. Looks like it was a double whammy over here. It's quite difficult to trade this. So I just did like a double fake out. Not enough volume. We should have seen at least a push through this level. A little bit more to fill this range with the way it was set up. Now it's come back into the accumulation. How much did I lose over here? 627. Man, why is it chopping? It's chopping in this area. We just need to see it break through this zone. That was a quick reversal. That was like an NQ move, basically. The volume is low. Maybe being a US bank holiday is affecting too much of volume. Yeah, it could be because with good volume, I feel like this should have even pushed like a lot more. But it peaked at around like 13. Shy of that 16 mark we're looking for. So it just chopped out buyers, boom, chopped out sellers. Yeah, that's about 627 over here. One fakey. It just mirrored itself. It did like the same. You got head and shoulders here. And then there's also a small little inverted one right over here as well. Yeah, no one's gonna win that fight. See, because when the market doesn't push, no one wins. Like, no one gets distributed. Right? So if buyers want to push, even have clean range, buyers have really nice clean range on the 1 minute right there. They don't get paid. And sellers also don't get paid. So no one wins in a situation like this. And then eventually, then price is just going to move. You know, whatever direction it moves. But it's already mopped up here and here. Boom, boom. Yeah. Awesome. B for the day. I'll take one more. Your internet freezed at that moment. Don't know how the internet manages to do that. Yeah, sometimes I have that happen to me too. But yeah, you see, man, it just wiped out. I don't know what liquidity grabs these were, because we had so many rejections off the other time frames there. You can see the nasty whip on the 5 minute. See how that 15-minute just came down, take out the lows? That's kind of what we mentioned was a characteristic when we started the stream. that price is doing this sort of thing for the sellers today. You see it right here. You can see it right here. But some of these don't have like entry confirmations, correct? I don't think they had any entry confirmations. But that's generally speaking what the market's trying to do. It's like really trying to force issues. It's trying to grab as many orders to get through those resistance points. But it's struggling because people are not so willing to buy right now. So every time it has to come down to trap sellers to go in the opposite direction. So kind of a risky environment. You see, when the market's like that, you don't get these follow throughs. You rather get like liquidity spikes and then it keep trying to push up until it fully tumbles, and maybe accepts that it can't move up anymore. That's what you're probably gonna see. But yeah, I think as far as the setup went, there was a pretty good move. That was the best decision that we could have done, or I could have done at that point, was to wait for price to sell here with a lot of confirmation that we had. So it's such a good trade. Look at this fake out over here. Boom, boom, inverted. This should have been when the volume had come in. Right here on this candlestick. And then melted like this. At least 16 pips. That's what I was looking for. Stop loss to break even. Then we had clean range on the left hand side for price to keep moving down. That would have been the trade idea there. And it would have been an awesome trade. It would have been an awesome trade, given the market conditions today. But you always got to make sure when you take a trade that you're happy about that trade. Because if you're not happy, then again, you're going to revenge trade and you're going to overtrade. And that's when all those bad habits are going to come in. Also had nice SMA confluence. We had 5,000 psychological mark right over here as well. That would have proved to be a really nice magnet for price to come and test that area. Damn. It's the context. That's the market context of the day here. So you see, we got the setup, but the context is what is most important. See, it came, it pushed, but it couldn't get through. Just same way it pushed here, it couldn't get through. Boom. But you see, there was no risk, there was no way to reduce the stop loss because price already pushed up quite a lot on that move as well. And now look at it. Now it's starting to pick a bit more of a direction here. Damn, Goldie. Really? It had to do just that last one right here. Look at this. It had to do that last wick. That last wick, that's what it had to do. Before closing back up and then getting a stronger push. It knew that TetraFX concepts would be right over here. So where a lot of the selling pressure would have come in. But what time? It's okay. Daily bias is down negative 0.50% right now. But that doesn't seem to matter too much to the market as it is trying to continue to push up bullish. Double top formed. Now you can look at sells after this liquidity grab. It's trying to push up. It's trying to push up. So I think right now for the London session, that's just the market environment. Like if you're looking for these sells, I still think, you know, it was a pretty good shot because the other liquidity grabs I showed you on the 5 minute and above, they didn't have like entry confirmations. Those were just grabs. But this was the first one that gave an entry confirmation. I'm trying to see if there's any other ones here to the downside. Nope. Yeah, I don't see an entry confirmation to the downside. That was a liquidity grab. Only this one here. But you see, even that one still pushed about, even before faking out. That one still pushed around 87 pips, 86 pips. Even before faking out. So that's what I was still anticipating. Was like, all right, you know, if it's going to fake out, like even here it pushed. You see, even here it pushed. How many pips did this do on that entry confirmation? That was about 137 pips. I was like, yeah, even though it fakes out, then we should at least get the break-even mark over there hit. But that's just a variable of markets, you know, like I kind of expected it today just because, you know, we've been in these situations before. I'm still thinking whether to consider them in my overall day-to-day trading, that market environment, because it's easy to spot that market environment in particular. But at the same time, I can't be bothered, you know. You just like trading is just like that. You just got to keep executing, and provided that it's not affecting the overall P&L too much, then it shouldn't be much of a worry. I feel like that's just going to be an additional unnecessary tweak. Let's see, gold kicks off new week muted after upbeat inflation data spurs rate cut bets. The gold opened the week hugging a $5,000 line, barely budging as traders absorbed Friday's softer than expected inflation print. After last week's fireworks, the metal looked almost calm. Almost. Thin trading, big week ahead. US stock market are closed Monday for Washington's birthday, meaning lighter liquidity and fewer cross-asset signals. Thin conditions can exaggerate moves even when the headline flows are quiet. Well, we got a thinning of liquidity, that's for sure. Wednesday brings the Fed's meeting minutes, offering insight into policymakers' thinking. Any hint of urgency on rate cuts could reignite gold's momentum. Thin trading, big wick ahead. All right, let's see what we got for the week up ahead here. Let's see what we have. Wednesday, we have CPI for the pound. Nothing, no news on. Oh, FOMC meeting minutes on Wednesday. But you know, that's just FOMC meeting minutes. Then we got unemployment claims. Thursday, let's see, Friday over here. Core PCE. Okay, so big week ahead. The most likely referring to core PCE price index numbers and FOMC meeting minutes. It would be nice to just to hear what the thoughts are currently here about markets, because I feel like markets are kind of overall consolidating. You know, we're all just kind of like waiting on the HDF for further price movements. So I think that's those are the two main things we're going to be looking out for this week. Yeah, let's go see our Chinese indicator here. See what it's saying. Currency strength meter. All right, so we got a US dollar, which is quite weak. Yen, pretty weak. Yeah, so a weak US dollar. Gold's moving up. It's maybe around like at 40% over here, slightly below the mid-level mark. Gold's moving up currently, but the daily is bearish. It's down 0.57%. So negative correlation is not working out too good over there. Yeah, but we don't really use that anyway. But let's see what the dollar index is doing. It should be moving down. Let's see. Oh, it's 0.07. But yeah, I guess it's not that strong. It's not that weak. More weak than strong. But it's like basically a doji. See a lot of choppiness here on the DXY. It's also getting ready for a move. See a lot of like indecision, a lot of waiting. Currently, it seems to be the case here. So I think, yeah, this big week up ahead, we're going to see for FOMC meeting minutes and core PCE. Whereas for gold, I got a bone to pick with gold. You know, maybe we're going to pick a bone with gold later today. Yeah, I think that's what I will do. I will look at it later and then see if I can get some pushes. But man, these pushes over here, they should have been a very nice push. Let's see how the buy push played out. That pushed out about like relatively the same amount before the retracement, about like 13 pips. Then started pulling back again. Dow was breaking up. Let's see. But would anyone buy here? I don't think so. We're not trading. Yeah, would anyone buy here? That's the thing. That's been trying to be corrected. It's you know what it's doing? It's like a trickle effect. You know, in the market, it's a pretty big range, but it's making it quite difficult to fill it up all in one go. So every time it creates a new higher high, it pulls back down. So there's a few signals here for a shock in the water. Also regarding that. So yeah, pulls up, pulls down. Next time it gets this new higher high being formed, it creates like a very steep pullback. Might even start seeing some steeper pullbacks coming in there as well. But it's filling up this range, but you can imagine become quite difficult for people to hold those positions. Whereas sometimes price can just go like this. That's typically what we would see it do. Like just come and like fill it up like quite easy. Or at least give a much bigger push before any sign of like retracements that you might get like somewhere around here. Boom. And then continue to move up like that. But now it's doing kind of like this, that resistance, and then boom, strong melt to the downside. So that's kind of what I wanted to catch. I wanted to see that continuation to come in, especially with the new session open. Since we got London open over here, predominantly we're seeing loads more selling pressure. Right, so we got London open here. That was a London open fake out. Price came down, pulled up. That could have been like a Fibonacci retracement of sorts as well. And then to continue potentially heading on downwards for the day. Because, you know, the variables change at a London open over here. Got London open kill zones. Got a shift in variables for that continuation. So that was the idea. Now I got to move on to the next idea. You know, and then on that next idea, we're going to take the best possible trade that we can take at that very moment. Unless you have a time machine, then I think you're going to be a very rich man or woman. But you see, I don't have one. So all I got to do is wait for the next session and do it again. That's what I got to do. But you know, the trade would have been actually quite nice since like pulled up like this here on this high. Because if it's creating new higher highs, then if there was a setup that happened here, we would expect more of that pullback, that deeper pullback, because it's going to be whipping. Oh, wow, look at that. You see? Because it's going to be whipping the buyers on the HTF. Every time it creates that new higher high, it whips the buyers. It would be nice to get a setup like, it would have been nice to get one like a bit sooner. But that's what I did as well. It like had a strong pullback and then it gives a setup like down here when it's ready to go up again. A very mischievous thing the market is. I know all these tricks. I've been through them all before. This market condition is not new to me. It's just one that I know that the probabilities are usually not on my side. Do I still take the trade? I still take the trade. I still take the trade. Maybe I shouldn't take the trade, but I still do it. I still take it. Because, you know, the idea behind execution is that you're executing, you know, that you don't have to second guess yourself too much. That when you see the trade, you execute. Because now when you start cherry picking so much, then that means you're also going to end up missing the moves which should be playing out. You know, it has nothing to do with bank holiday or anything like that so much. I mean, we took a trade last week. It was a bank holiday on sometime, I think it was last week, Monday. Or something of the sort. We had a bank holiday. We still took a trade. It was a winning trade. And, you know, you're not going to think of bank holiday when it's a winning trade. You're not going to think of bank holiday when it's a losing trade. So that's that victimhood cycle that you can never win in that, you know, because you can't change the past. So there's no point even doing that to yourself. So yeah, I think now I got to do is wait. Hopefully like this cleans up a bit more towards pre-New York. But yeah, we'll see. We'll see. It is a bank holiday. Maybe today the best thing to do would be to not trade a second trade. But I will let God take the wheel. When you have a system and a strategy, sometimes if you get a clean setup and the markets open up a bit more, why not? Why not? Why not you? You've got the brains. You've got the skill. You can do it. You have access to the information. Why not you? Somebody's making money here today. Why not you? Somebody made money. Hey Schwartz, good morning, good morning. Next sell at 50.20 after liquidity grab. 50.20, yeah, we gotta wait and see. 50.20, I think it's gonna fill up like 65% of the range by then. Let's see. It should be coming in. Oh no, we've already filled 65. Look at this. We filled 65% of that range already. So we started having some kind of a reaction here, you see. Now we're gonna wait and see if it like continues pushing up above here. Got about 80 pips left for that range to fill. Why not you? How many trades we're taking this month? Taking about 16 trades. You didn't know it's a bank holiday today? Yeah, you gotta check on the, what do you call it? The Forex Factory. Every single day, this is what you have to look at here. You know, never miss a day. If you're trading the London session or pre-London, I typically don't look at it because I know there's no events here which is gonna affect me unless I'm trading the pound. Right? But I think it's always good to just keep this in mind, especially once you're getting into the London Open, what could potentially be moving markets. I don't know about pre-London confirmations. I see some people took a buy here. Got a nice buy during the pre-London time. W trade. The doc looking for sells. Nice TP smashed. You got it on the fake out by the highs. You see, you got to like, you kind of get it right here when it created the new higher high. So you're still coming in like slightly a bit earlier as well. Very nice. Oh, what happened? Did you not take the sell? I knew this was going to be a bomber clot trade. Why didn't you take the sell? Let's say looking for a sell below. Let's say TradingView and broker all froze and dumped. Oh, use it as confluence for the buys. Fake out below. Our rejection. Yeah, at least you caught the buys. TradingView and broker all froze. Maybe it was not possible to catch that move. Yeah, maybe it like moved through it like too fast. But imagine if you did, that was a clean 80 pips, but the buys looked a bit more stable, and at least you got that fake out confluence for the buys too. That would have been a very nice trade over there. Actually, the setup that we took here today, we haven't even had that setup in quite some time. That specific variation of the breakout. We haven't taken it in quite some time. Three W's for the day. That was last week. So remember guys, if you're taking any trades, send in your chart work onto the Best London Session Discord over here. And then we can have a look at your charts for you. Oh nice, I just advanced to level 25. Awesome. Very good. Let's read some news. Gold above 5,000, but holiday thin trade limits gains. Gold trades above $5,000 after a softer than expected US inflation data lifted hopes for further interest rate cuts this year. China is a key engine behind the months-long rally in precious metals, and selected industrial metals will remain close through Feb 23rd, potentially limiting additional upside in the near term. What a pesky wick that is. Look at it. Just staring at you right there. That's what a trade does after it stops you out. It just stares at you. Just stares at you. And then you gotta know what it did over here. I also like this confluence that we had. It was like a doji candle, right? So got a bit of indecision in there too, which also kind of like solidifies the idea that there was some kind of an accumulation happening. And then it did end up pick. You know the funny thing about this 15-minute though, that 15-minute already had a top wick when it was breaking these lows. But when you just look at it from a 15-minute perspective, it might seem that it broke the lows first and then closed bullish like this and then continued to move up. But in essence, it opened, it broke the highs, created a top wick, and then it broke the lows, created a bottom wick, and then it closed bullish, and then it went up again. So it's kind of like, you know, when you play basketball and the guy does that move where he kind of like sidesteps you. That's kind of what Price did here. It kind of like sidestep you. And it usually will happen, I suppose. For such a big move like this, with all those confirmations that we got for the sells, I think that's the reason why it also played out so beautifully. Because remember, like when you take a winning trade or a losing trade, you're not the only one in those trades. Right? There's a bunch of people who are going to think the same. If you believe you have an edge in the market, there's a pretty good chance there's someone out there who is looking at a similar idea as you. If you believe you have an edge, especially if you have proven to yourself it's a consistent edge, there's a pretty good chance somebody else out there has kind of like figured it out, because these windows of opportunities are pretty small, right? There's only a certain amount of ways that people can get in and out of the market within those windows of opportunities. So you're all kind of like in the same boat there in a sense. You see, like to catch this move, there's only a certain amount of ways that you could have caught this move right over here, because that was the genuine distribution to the upside. So trading is like a game where you're in a lobby all of here together, but you don't see or speak to each other in the lobby. So you have to communicate via candlesticks. So if you can't read candles, then, you know, you can't trade. It's just simple as that. You can't communicate with the other players. Got like some 50-minute rejections over here. 30 minutes pulling back slightly. It is still trying to make its way on upwards here towards that resistance. It's just quite a lot. It's just quite a choppy overall market condition. But it's moving. I couldn't catch the sell. It was 5 pips away from the entry. Then everything froze. When it came back, it was down 60 pips. Oh. Yeah, it's kind of crazy. Your trading view froze as well. Usually it just be the broker that freezes. So, maybe your internet went off. Or maybe there was a ripple, kind of a ripple effect across the market. Across all brokerages. Weekly candlesticks don't have a top wick. Yeah, obviously that new daily opened without a top wick, so we're yet to create that. It'll still be quite even though we flip, you know, that's the thing with gold. It's in such a sticky situation because like even if the daily flips, like where are you heading to? You have a resistance right over here. It will flip and then it will quickly bump its head back there and then it will come back down, right? Unless now it's convinced that if it wants to keep moving up, we need to break and close above this level and then break the wick highs, like 51.23, to keep moving up bullish. You know, but as of right now, it's stuck in between a rock and a hard place. All right, you also got that support area over here. So if it comes down, where's it going? It's gonna hit that support. If it comes up, it's gonna hit that resistance. And what do? We have FOMC on Wednesday, Core PC on Friday. Is it gonna move before those news events? You know, so it's stuck in between a rock and a hard place. So hopefully the intraday timeframes are not going to be too much affected. Like I saw during the Asia session here, price was moving like pretty decently. You know, so for me, I was even surprised that a price was moving. When I came into the chart, it was already down like 0.60%. But now it's like trickling. You see this trickle effect here? Man, this is the worst kind of a market condition. This trickle effect. This trickle effect right over here. See, this one is a lot more smoother. It's like you got like the butter, right? This is a lot more smoother butter over here. You're going to put the butter on your toast and it's a lot smoother. And it just looks nice and it's easy. This is like when the butter freezes in the fridge. And now you gotta try to get the butter and you're getting all these chunks of butter and now you're destroying the bread. Right? Because the butter is so hard. That's what this is. So yeah, very, very choppy conditions that is. So, you know, what can you do? You can take a trade, but just don't expect too much from it. And that's kind of what makes the difference between your abilities to take on challenges and take on bigger risks. Being able to identify that right there. Agreed. Trickle sucks. You know where it's going. Yeah, you know exactly. You know where it's going, but you can't get in. Like you can, but like you can't really. You know what I mean? I try and remove all the fugazi stuff where guys always gonna say, oh, but you know, you could have done a Fibonacci here, or there could have been a fair value gap there. But that's not what market structure is telling us. Market structure is telling us something totally different. Like the context of PA is different here. It's not a matter of like, oh, if you manage to catch a trade, you know, good for you. But we're talking about market structure. I think is quite different than strategy, than just wanting to be right or wrong. Which, you know, for some people, it's just more important to be right or wrong. They don't care about the overall skill. That's why the views go up when I take a trade, and that's why the views go down when I don't take a trade. And that's why majority of people lose in this industry, because they don't care about that. They just care about being right or wrong. That's it. You're going to win or you're going to lose. But the reason why you won or lost is not important. It's either a win or a loss. But it's okay. You know why it's okay? Because the disciplined ones are the free ones, right? Like my favorite marathon runner, Elliot Chipkolge, says, they're only the disciplined ones are free. So we just remain disciplined and we keep doing what we do. Correct, chat? And that's all she wrote. Just keep doing what you do. Stay disciplined, stay focused. Everything else is a distraction. So right now, what you're not going to do is you're not going to overtrade and you're not going to try and fight the market. If you want to fight this fight again, you just got to wait. You got to wait till pre-New York, maybe New York Open. But know the battle that you are fighting today. Fighting a potential thinning out of liquidity battle. So then you got to decide whether it's going to be worth the type of fight that you want to fight. You know, that's again, if you're doing a challenge or you're trying to do a flip and they're trying to be very cautious, that's what's going to determine if you're going to take that next trade. But if you don't mind, you know, if you're already up for the month and, you know, you're just trading, you can go for it because now your risk appetite is also looking a bit different. Correct? But if you've been losing a lot, you might want to be a bit more cautious. If you've been winning a lot, then you know, what's the big deal? You gotta like just keep going. And allow every system to have its natural cluster of winning trades and losing trades. Just let it naturally progress. Let it naturally progress. Because once you have a system, you just must execute and be disciplined. That's not the time for you to be restructuring what you've already been doing. Because sometimes a lot of people like would do that. They backtest over the weekend, and then when they come onto the chart, they're doing backtesting and forward testing at the same time. You know, you shouldn't be doing that if you have a system. So if you did some backtesting over the weekend, guys, like just follow your system this week. Like write down what you could have improved. Like try and get 1% better each day. But try and follow that system according to your data as much as possible. Because you can't have data over the weekend that says the system is profitable. Take your first losing trade and then change the system. You know, that will also not make any sense. So actually the best thing, just write it down. But just keep following that system to see how well it plays out throughout the whole week. And then at the end of the week, you're going to have your data. And see what should be refined. Well, a lot of the time we tend to do that. We will backtest the system, it works. Take a first losing trade, we're changing the system again. It doesn't work like that. Yeah, but let's see. Price right now is setting up again. It looks like it's trying to push up. You see, it's doing this little cheeky liquidity grab pulls. Let me see how that looks on the 5. Nothing. It's not breaking any structure on the 5, the 50, and the 30. Oh well, it did actually. It did take out slightly this previous candle here. I wonder if it's still fetching liquidity. It looks like it's still doing it. You see, even got one like right over here. Break of the lows and then start pulling back quite aggressively. Seems like we are still fetching liquidity. I think the only difference is this time that we have actually filled 65% of the range. That would be the only difference, right? Now that we've hit around 50, 15. That would be the only sort of like shift to when actual selling pressure can start coming in again. It's quite brutal. Even look at the way it hit 65% the first time. It pulled down, take out the lows before hitting it up again, broke up the highs, and then now it's pulling back down again. It's trying to break out of this area here. Boom, let me see. Dun. Yeah, it's trying to break out below like 50.10 right now, but it broke with nice volume too on this one because this is like one candle that broke out. There's a long wick that it needed to get through. Kind of like a similar situation that happened here. There's like a long wick that needed to get through, but we needed 2 candlesticks to break. Whereas this one did it in one go with one candle, which is usually a good sign because that means there's volume in that candle. Now it can be a shotgun down. Yeah, now it can be a shotgun. We got 20 seconds for candlestick to close. That'll be additional confluence. Here would be more of anticipating a V-shaped reversal to come down towards that support. Right over there. Yeah, you got about like 10 seconds. Possible shotgun here once it closes below like 50.11. You can finally see it come down. Since it's already tapped like 65% of the range. Let's create like a top wick. A re-break of the shotgun lows should give these sellers here a little run for their money to the downside, but yeah, now I gotta watch. Now I just gotta watch because we know there's a shark in the water. Healthy top wick which is formed there, though, on the 5-minute. Very nice clean range. Keep going. It's gonna be like a wick fill. It's gonna fill this wick and then break the wick close to continue moving down. It was like 5,004. Gotta put the plane back in the hangar after that flight and then, you know, do some maintenance for the next flight. Got my ailerons were damaged. Got a bit of wing damage over there, but we managed to land the plane, you know, with a little bit of wing damage. So we'll put it back in the hangar and then we'll try again for a flight later. Number one rule in trading: don't lose the money. Don't lose your capital. Don't blow an account. I got in early with gold, a buy trade, waiting for hit TP. See big supply 50-20. According to order flow, 50-40 is a premium price, so might as well see some sell. 50-40, let's see. What makes 50-40 a premium price? All the way up here by resistance. Yeah, I mean, that would be the high, I guess, of the most recent structure that we have right over here. So yeah, I think, you know, you can set like some alerts like this, and then when it comes to 50-40, then you're gonna take your sell. Oh, wait for your confirmations. But if you're just sitting on the chart like this, waiting for 50-40 to hit, then you, sir, are a real soldier. Because we still have to move, how many more pips? 281 more pips. You're a real stormtrooper, sir. Volume still good for USD bank holiday? Yeah, it's good. It's the thing is moving, right? It's moving. It's just this chunk of PA here that we broke it into, which is a bit garbage. Let's see what NQ is doing. Daily is also starting to move a little bit towards the upside. See 4 hour. Yeah, we had that 4 hour resistance that we have to break through also on the hourly. Looks really clean once you get candlesticks start to break above that high. NQ is also correcting this cheeky little range that we have from here to here. It's not trickling as much as Goldie because the range is not as big as Goldie. It's kind of like breaking out towards this area. Once it started breaking these highs, that's kind of where it's heading towards, like 24,884. You had a little bit of accumulation right over them, then it's starting to break above. It's heading towards resistance. It's moving cleaner than gold. It indeed is chopping up a bit, but it's not a trickle effect. It's more of like volatility here. That's volatility in terms of the range fills. The range is getting filled there nicely. And once it breaks above like 24,880, 24,900, then it's got like a clean range again to move up. To keep moving up over there. So yeah, it looks good for NQ. I mean, provided that now when it breaks here, it starts moving up without trickling like this. Because that's also a big range, you know, and it's a USD bank holiday. So you might get a similar PA like this on NQ once they're breaking above here. These smaller ranges will probably get away with it because it's not enough for a trickle effect or much of a trickle effect. Even though it can still do it, it's just not as much as the much bigger ranges. So yeah, that's the only thing you'd be cautious of now when NQ starts to break above 24,900. Because everybody's looking at that range. This is like open water over here. So everybody is like, you know, if you watch a Mr. Beast games, right? Like how they're all gonna be on an island and then they have to like swim from one island to the next island. Or something of the sort. That's kind of what it's gonna be like a Mr. Beast game once price start crossing around here. People are gonna be looking to see how can you catch a trade to keep moving up bullish to like fill up some of this range. You know, and as price is moving up, it's also gonna potentially be trying to shake people out. That's gonna be the main event above 24,900 on NQ. Whether it can correct or start to reverse. But the daily looks good for a pullback to the upside. It looks like less pressure for the daily to move up over here. As it's already tested the lows, come down. It's much harder for it to now reflip and then keep coming down here. But if it came up, there's a lot more room. And I think on the weekly, we're also at the bottom of the consolidation, right? This is where the overall rejections are going to be over here. And then for the weekly candle, it's already created its weekly lows, potentially to come back up. Because this is the current market condition. Sideways movement on the weekly. So that's what I would be expecting from NQ. Yeah, it looks like it did give them a whip over here. You see, the breakouts are there, but it's the issue here is the market has picked a direction. It's to the upside, so it's doing these grabs. Like every time it creates a support, it grabs and then pulls up. Remember, it's not like we're not surprised. Like I mentioned this literally in the beginning of the stream. Like we've been in these conditions before, and that's probably what we're gonna expect in those conditions is like possible fake outs, but I'm going off the fact that there's a lot of volume in the market overall, right? So I wanted to see at least 16-20 pips before those reversals. But this is not new, chat. Like I spoke about this. We've been here before. The only mistake you're gonna make is when you overtrade. I think I did that overtrade once here. This was that day. See, I even know it like to the T. This was on January 7th. We had the same market condition right over here where it was doing the same exact thing, but you know, me being a dumbass here, I wanted to prove a point and I took another sell and it was a losing trade. But that was the last time that we got entry confirmations during these market conditions. Was January 7th right over here. Then otherwise we've been pretty much good. Pretty much good. If I take another trade, it would have been the same result. I would have had another loss like this, just like I did in January 7th. Isn't that neat? Data. Data will show you the probability of what to expect next. That's why I was watching these cells here. I was like, damn, okay, so what's gonna happen? It's kind of like a gamble because price is trying to push up. Euro US dollar, we don't do that here.
We don't do that here.
My thing is, how do they know you're taking a trade? How do they know, chat? How do they know? How? You know, it's one thing to lose trades when you're not profitable. It's another thing to lose trades when you're already profitable, because you can dig into the information a bit more clearly. Because if you're not profitable, it could have just been a bad trade. You know, you're still trying to figure it out. But when you're profitable and you have some kind of a consistency, that's when you can really start digging into how do they know that you'd be taking that trade. Because the market has a way of setting it up to, if it needs to get those orders in, those fake outs, it's going to give you the setup. See, like right over here, it did give like some kind of a setup, right? But it gives it just so it can do what it does best. Draw liquidity from you, right? That's how it knows, because there's only a certain window of opportunity, chat. Y'all think I'm making this up? I'm not making this up. There's only small windows of opportunity that you can actually make profits, right? The rest of it is just random. It's much harder than the rest of it. So think about it this way. A lot of choppiness like this, and then, okay, you can make money here, of course, but like this is just not the ideal situation for the market. Will just, mostly more people will be losing outside the outer fringes, right? So most people will be losing outside the outer fringes over here, and you're just trying to get within that weakness when the market gets like a little bit weak, a little bit predictable, because it has to pay as well. It can't just like all the time, like literally if the market wanted to take your money every day, it will just do what it's doing right now. It will just trickle like this. You'll never be able to really win, or you really have to change the way you perceive markets overall. At the same time, if it always does that, like people are going to catch on to it, and then they're going to start looking for those fake outs that start doing the opposite, right? But it does that, like the market knows how to differentiate that. Like, you know, one day we're going to get that specific trickle, the next day we're going to get like another specific price action, but it knows these things. It's like, think of it like it's been sample size for so long, you can't outsmart it. It's super intelligent. So every day there's always these small opportunities. That's what we call like your edge, right? You have to come in every day, and every day the edge changes because of the different market condition. If it's going to be a trickle or the other things that it does usually when it takes money from people. But those also, in those days, you win most of the time because you have a profitable edge. But you can't have it throughout all market conditions. Like some market conditions, you just have to listen to your gut and say something like, I'm not going to trade this day because I've identified today is that trickle day that I'm most likely going to lose. But if that's going to be up to you if you want to do that. Or you can just trust the process and say, you know, it's a business expense, whatever. Like if it works out, perfect. If it doesn't, I just keep going. Just let the natural cluster play out. That just depends on how much you're okay with potentially missing a move on a trickle day. Like if you're okay with missing a move, then don't take it. If you're not okay with missing a move, then take it. Because you don't want to miss the move that you should have taken, right? And then start looking for opportunities later. That's the kind of thing that you're trying to avoid. You're trying to find yourself like some kind of a consistency. But I do like this range that it's building right now. We have from here to here. Looks very clean. But it looks like a potential buy because it's coming down. Small liquidity grab towards the lows. Could end up breaking above 50, 14 and then continue to move up once it breaks a high. But yeah, sir, that's how the market knows. It knows this. It's very, very intelligent. It's not random. People think it's random. It's not. Like, man, have you been trading for a long time? There's just like a certain way it moves that you just know. You know your edge and you know these movements. You know your instrument. You know what your instrument's capable of. What types of days your instrument has. Because if you're going to trade a new instrument, like something like NQ for me would be new, I would have to give it the same love and attention that I gave gold so that I can fully understand this pair, that I don't play the victim on certain scenarios, that I fully understand its different models throughout the year and throughout the weeks and days of how the market context looks, so I can give it a fair analysis. But right off the bat, like, because I'm comparing one-to-one with gold spot, there are moves that still play out because markets all move bullish, sideways, and bearish anyway. The market structure doesn't change, but it's definitely not as forgiving, I would say, as gold spot. And in the market for a day trader, you kind of need that instrument which is slightly a bit forgiving, right? Because day trading in itself is there's a lot of volatility and choppiness, and it's getting that little bit of forgiveness is quite nice. I do appreciate it. So that's why I love gold. GJ is also quite forgiving. GJ is also a pretty good pair because the only thing with GJ, it moves slower, but it respects PA. Like you also see like small little breakout here. Daily bias is bullish. You got a few. Oh man, this was a beautiful risk management here. So instead of risking like 20 pips, you can reduce risk to about like 6.47 pips, 6.5 pips. 6.57 pips. That's what I love about GJ. That it moves slow enough to also give you like risk management models and reduce your risk. You got negative candlestick closes, closing partials, reducing your stop loss. That's kind of now the relationship that I have with GJ. Just gotta wait for price to move slower. So yeah, I think that's all. It's distributing beautifully. Could have been a scale in at break of the highs. With the stop loss there, would still be less than your initial risk. How much percent of the simulation sessions would you say y'all have watched on the playlist on WAP? How much percent would you say? Like 50%, 100% of those simulation videos on the add-on section? Because I think that those are really important when it comes to understanding what I just said here. I'll start early on to never trade inside the range. I have to wait for the breakout from consolidation. Yes. You can never trade inside the range. You wait for the breakout. But you know, the funny thing is, like, what range though, John? Because the market is fractal. Because you might be talking about this range, but what about this range? And then what about the higher time frame range? So you're kind of like always in a range if you think about it. So it's kind of like, yeah, you don't trade inside the range, but you're kind of always in a range. But I know what you mean. You gotta wait for the breakout, indeed. That is correct, sir. I was talking about pip and dippers, but game is game. Yeah, pip and dippers. Pip serendipities, serendipiters. You got the pip and dippers. These are the guys who are gonna have like 10 tabs open of live streams and try and say, oh, I'm getting free signals, but you're not. You're actually just messing up the cluster of good and bad trades. Because now you're trading everything, and everybody's gonna have a different cluster of profitable and losing trades. It broke the highs of it and then pushed like what, 20 pips? It's quite directional. Let's see. Drawdown, pretty much no drawdown. Very minimal drawdown. And push about 20 pips. So it didn't end up breaking the lows, it ended up breaking the highs. Even though the daily bias is bearish, you can see the market sentiment is leading more towards the upside. It's down 0.045%. So we're about to see that daily bias there flip back to waiting soon. Your 3-year-old just said up and down. Up and down, up and down. Actually, in a whole, if you zoom out, markets are quite stable. They're kind of like more flat. Like really zoom out. They're more flat. That's why you're never gonna wake up one day and see your dollar super fluctuate like Bitcoin. It's like Bitcoin has come down so heavy of late. Like in terms of the value of holding a Bitcoin here, it came down so much. Started breaking below. It's gone the weekly time frame. Yeah, we just tapped like 60k right to the T. Now it's just waiting for the next setup Bitcoin. You see, there's no structure at this point. The only clear structure, as you can see, even the market knows this, was once we broke below psychological 80k and that support right over here. See candlestick close below that support, rebreak of the previous candlestick close, and then look at this. Look at that reaction that you get. Market participants coming in and then pushing price down straight to like 60k. right to the T by 60K. You see that? That's not random. So that's what we call that window of opportunity. That small window of opportunity there is to always make a little bit of money, you know? That's what it is right over here. Because then this is all just kind of like random what happens here. It's all kind of random until we start getting some clear ideas of where price is going to be heading to next. And that's typically when you get stuck in. Yeah, this is a nice little accumulation break. It's still doing those cheeky liquidity grabs, chat. Like, look at it. Right here and then right here again. I think that was the last one. Just the same one that what happened on the 15-minute down there. That created like the bigger move. Right over here. So let's see if there's actually... But there was no entry confirmation on in that go. Because it created a support first and then broke the highs. But it still got the other traders who are looking for sells here for whatever reason. But you can just see how mischievous that it can be. That's why you never overtrade, correct? Because you don't know what kind of... Especially as a new trader, you won't know context. You're still going to be learning context via experience. Right? So you wouldn't know. Those are the days that you overtrade, which are the days which really hold you back. Because you might be used to getting it back or getting lucky on other days. Because as a trader, your emotions are really volatile. As a new trader, very volatile. You're more prone to these type of revenge trades. But you always kind of get caught on these days where even you don't get that luck that you typically get on a day that you can overtrade. You know, eventually you get a trade, but on a day like this, it can be quite humbling. Yeah, let's say that. Let's say that. It's a humbling day. It's a day to humble overtraders. But look at this. We got a kiss of death that happened on this 15-minute here. That also lined up with that liquidity grab. Boom. It's quite a difficult zone to get through. That's why I was worried, like when I also saw that 8 SMA here get a rejected. Because the way it's moving now, if you just ignore the fact that the daily bias is bearish, the way it's moving as if that daily bias is bullish. And whenever the daily bias is bullish, that's typically what will happen to sell confirmations. They'll get pulled and then pulled back against. Like you get a fake out like this and then it's going to pull back against you. And no matter how much you try to get that sell, it will just keep doing that and pulling against you. Correct? Those are the days that you do your counter trends, which just never play out. Just go long and thank me later. Nope, that's not how we do things here, sir.
We don't do that here.
Vic, how room for discretion do you live in your trade plan? How much room for discretion? What do you mean, like discretion? MT5 on MacBook is different than yours. MT5 on MacBook. Yeah, on MacBook it will look slightly different, I think. These aggressive pullbacks are actually lack of orders for continuation, not volume. Okay, I was using DOM and can see that there are no buy orders after reaching a point and it tanks hard for first order. Yeah, it could be lack of orders for continuation. That's true. I mean, it could be like just lack of a big player to come in all at once, or lack of orders. Like it will push like, you know, 60 of 13 pips, and then beyond that, there's no orders. There's no orders over there. It's not maybe the risk is not as appetizing, so that's why it stops quite abruptly. Like even right here, it stops quite abruptly. It's not like those obvious trades, you know, like look at the kind of risk appetite people had for sells down over here. A lot of people want to sell this. Price action was very clear as well, just the same way as it was here and here. So the risk appetite was definitely more on. Setups also did look a lot cleaner, to be fair. And it was early within the sessions too. Done for the day. Remember, drink more water, chat. Yeah, this buy has forced a lot of issues. I don't get it, like, humble already. Look at this rejection. You got resistance, rejection wicks. It's like they really have to struggle to push it up, eh? It's like just let the sellers in, man. Like, just where the sellers today? Because it's gonna eventually tumble. It looks like it wants to tumble. It's struggling to move up. Again, look at this rejection area that we built over here. It was literally the same thing that was happening right here. Right over here. This candlestick had pulled up. It tried. It was like, oh, I'm trying to lift the weight. and then it couldn't lift the weight, and then it just dropped. And then all of a sudden, it tries to push, but it doesn't give that follow through. Then it keeps doing the opposite. It's really annoying because it's like, it looks like here it wants to sell. And then again, you're gonna see a candle. Maybe it'll come down like this, and then all of a sudden another candle goes up. And you're like, hey, what's going on here? I thought we are gonna get ready to sell finally. You know, this is the type of PA, especially for those people who try and catch the tops, right? Like always trying to catch the top, always trying to catch the top, then it just keeps going against them. Oh, we got Chinese New Year tomorrow. Nice. That was a good way to end Friday. What do we take? Was it a buy? Last trade I took? No, that was a Thursday. Yeah, we did not trade on Freaky Friday there. I think it should be a good week up ahead. Yeah, I think we should have a good week. Look at these 50-minute rejections right here. Breaking above, pulling back down, breaking above, pulling back down. Got 1, 2, 3, 4, 5 wicks. This thing is gonna tumble. Question is when. We just got a new hourly candle open. Bulls are in charge so far? Yes. Hey, Mr. Rothschild. What does Kiss of Death mean? It means like when the wick is right below the candle, and then you're gonna have a reaction. So, for example, all right, let's get a bar. For example, something like this, right? So you see how the SMAs are starting to catch up to price right here, that 8 SMA, or it could even be the 50 SMA, and then that's it right here. That's the Kiss of Death, and it's pretty good. Like if you have a entry confirmation, but if let's say you took a sell right here, and then you're coming towards an SMA, which is going to be a psychological support, that Kiss of Death's quite risky because usually you get like a volume candlestick that follows it. So you see that next candle will kind of like prop it up. That's how it typically would look. And then go against you. So it's a nice confluence. It's like a what they'll call like a death cross when your SMAs cross over during entry confirmations. It should, because these are like momentum, right? So these SMAs are momentum indicators. They're there to show us some kind of a momentum, and since we're also trading like breakouts, they help with that whole idea of like how the breakout is gonna look. So these are momentum based indicators. So we get like a Kiss of Death or a crossover, it's a pretty nice momentum indicator. So even like it can even look like this, where a candlestick closes above it, then it acts like a break and a retest. So you'll see it come down, you see how it opened, boom, give it like a little high five over there, and then it's gonna move up, or like a low five. That's kind of like the Kiss of Death as well, right there. So yeah, if you want, you can download free indicator in the description box, chat. Put those onto your trading view and then just watch how it reacts. You see, like right now, it's happening right now, just as I was explaining to you with backtesting. Now you can see it in live condition. Same thing here on the 15-minute. So yeah, put it on your chart. I think it's going to show you some pretty nice things, you know. That's why for me, whenever I see that, you know, this is where I took my sell, and I was really hoping we could at least take over the psychological support, but whenever we saw it reject like this, ooh, you know, we can expect that spring. We can expect that spring up. You see that momentum? It kind of like push up again. So it was not such a good sign over there. See again? And then it did the kiss of death here again, and then it pushed upwards. Then it just holds it. You see how it holds it? It's like a momentum. See that? It still kind of like holds like a psychological momentum. Then eventually cracks through it. And when he cracks through it, typically that's when we should also be expecting the same thing, but stronger pullbacks. But also use in the correct context, right? Don't just use it as a strategy that you're just using the line. It has to be in line with the context of the market and what kind of like a price action is being formed. That is where people go wrong, is when they're going to use indicators as strategies and not use that in line with a confluence of PA. That is where you go very wrong. I wanted to use my new soundboard today, but looks like I couldn't because I took a losing trade. But this is how it would have sounded. I think it's pretty nice. Oh, no, that's not the one.
Beautiful.
Oh, wait. We have the music. All right, wait.
Beautiful. Beautiful. Something close to genius.
Well, when he's around, you've always got a chance. Muchas gracias, afición. Este para vosotros.
Tomorrow we're gonna use it. Dinner is served. Hey, enjoy them dumplings. Get some good fortune cookies. Some good fortunes been told for you here for the new year. Happy New Year, Woods. Happy New Year to everybody from China here. H4 closed below the resistance. I don't know what you're looking at, man. This 4-hour candle still needs to close. Got 47 minutes still left over there. Let's go no wonder, maybe a different broker. Oh yeah, no wonder the chart looks a bit different. You got resistance right here. Yeah, obviously we closed below resistance. We didn't even make a attempt for resistance too much, just kind of like a low volume. Now it's coming down. Yeah, the chart work looks slightly a bit different there on Owanda. But 4-hour is it's not made any true directions. You know, we're still like in this range. We've been trading on the LTF, like that range on the, let's see, 30. Man, if you really focus on the 4-hour, that means your trades, I don't know how exactly you're trading those higher time frames. Yeah, I don't know like how you're gonna trade, because okay, so when I trade off the 1 minute, the 5 minute, mostly up until the 1 hour. Those are the time frames that I use. But most of the time it's usually like 1 minute, 5 minute, and up to 30 minute. Yeah, that's pretty much, that's the time frames that work in confluence with each other. So like when you look at the 4-hour, you can't look at these lower time frames because the 4-hour is too big. It's too big. So, you know, what are you looking at? What are you looking at? Maybe you're taking trades based off the hourly candles, expecting them to move the 4 hours. But yeah, I think at that point, you're just basically a higher time frame trader once you start really focusing majority of the work on the 4-hour. 4 is fine, man. It's gonna take like 4 hours for 4-hour candle to close. You know? Then take 4 hours. We're usually on the chart for our trade, like within an hour, we're gonna take our trade within each hourly candlestick. It just melted. Yeah, this melt was bound to come. It's all right. It's filled more than 65% of the range. Now, I don't know why the buyers are forcing issues so much. Like they have filled the range though, like a good portion of it. They're stuck right smack at 65%. It's like holding like some form of you could call it like a psychological resistance. This is right by 65% there by 50.15. See, it like tapped into it, spiked a few times. Big exhaustion candle right over here on that doji rejection, and then now tumbling finally. I feel like usually when price is supposed to behave PA, it doesn't move like this. Like, you know, this trickle effect, like that's not a typical price action. So this sample size of that type of price movement, it doesn't happen that often, but it will happen, like, let's say, like every now and then it'll happen, but that's not the more natural organic type of PA structure, right? So it's really forcing issues to move up. I'm not sure exactly why. The problem is there's not enough sellers in the market and there's not enough buyers in the market, but there's slightly more buyers and sellers from 12 midnight Eastern time. There's just been slightly more buyers. I feel like the sellers came in for the pre-session moves and then they just kind of left the market. And now there's just not that many buyers. So it's creating this kind of trickle. And I guess you could chalk it up to USD bank holiday. I think that's the most easiest scapegoat for most people, is to say it's a USD bank holiday. But even on bank holidays, even on not bank holidays, price can still move like this. Even when it's not a bank holiday, it could still move like that. So don't use the bank holiday thing as an scapegoat. It's just something that can be used as a way to maybe make a little bit more sense of the context of the market environment today specifically. That's something that you should watch out for in any case, even on days which are not bank holidays. Because, you know, we took a buy on a bank holiday last week and it played out beautifully. Very nice buy. Is this pre-NY session? In about an hour's time, it will be pre-New York. Like on the next hourly candle open. So that's going to be in 42 minutes. You're going to get pre-New York. And you see that volume, the tide is already shifting a little bit. As we're approaching pre-New York over here. See, that was the London. This was the London Open PA from pre-London. And now as we approach pre-NY in 42 minutes, the tide should shift. The characteristic of the way the candlesticks are printing should also shift slightly. That's why you can't overtrade, right? Because if you guys taking like too many back-to-back trades, you're still in this overall area in the market. So if you saw your buddy get eaten by a shark, you know, you're probably gonna wait a bit longer before jumping in, correct? You're not gonna jump in right immediately after that. You gotta wait for, like, you know, maybe lunchtime, and then you're gonna try your luck in there. I think that would be the smartest thing to do, because the shark will get bored. It's gonna eat and then it'll get bored because no one else is jumping in. Because we see it, we all see it, chat. Like we all see it. A lot of the profitable traders are the ones who are also, like facilitating a lot of the cleaner PA that we see on a day-to-day basis. Otherwise, I think it would be a lot more random. So the more it chops up, the less willing people are going to be to play. You know, the less willing these high rollers would be willing to play. So the market knows this, and then it's eventually going to go back to normal. Start trading normally again. But yeah, today is a US bank holiday, so you might see some more choppiness throughout the New York session. But we're still in prime London open time. But generally speaking, it's gotta pay. It's got to pay. Or we don't play. If it doesn't pay me, then I'm not gonna play with you. It's the same thing like in a casino, you know. Some guys don't like certain tables or certain dealers. You're gonna see like they're very superstitious about those guys. They're not gonna play with them because they look at them like they're a choppy market condition. They look at those people like this kind of market condition here. I only had one BE trade earlier, then I got smart. No losing trades for you. My chart's different because you're probably in a different broker. This is a FXCM. Divergent between MJC and spot. Oh, hello, hello. Forex Prodigy here writing in Chinese. That's how anime looks to me whenever I'm eating like food and I gotta put my head down for a second. It goes from English to Chinese. Oh, I mean Japanese. And then you gotta look back at the TV, then it goes back to English when you're using like subtitles. The PA looks similar to the range fill that took on Friday in the pre-NY and NY. It should tumble. Look at the way the 15-minute looks right here. Massive rejection wicks again. So this is a rejection. That's what we call rejections, right? This is a wick fill. Let me show you right over here. This could be look like more of a wick fill. This is just at a resistance point, but that's not necessarily a rejection. So it's potential wick fill, and then this is a rejection. See on the 5 minutes coming down, breaking below the accumulation, but it's not doing it easily. Let me see how much that push was even. If this was even forgiving enough. Not at all. That push was only about like maybe 11-12 pips. Yeah, not at all. Before it started like pulling up, because you see it did like 44 pips in the opposite direction. So yeah, it's not quite forgiving to the sellers in the market. I think even if I avoided the first sell, I would have probably been caught. I would have still been caught on the second sell. Yeah, either way I've been caught on the second sell. If I didn't get the second sell, I would have been caught on the third sell, which could have been the break of these lows right here. So yeah, imagine over. Oh, maybe this day I could have gotten a BE, but let me see. Boom, boom. Yeah, but imagine that, like on the day that you overtrade, that's when you're gonna get like so many back-to-back losses. You're best off like overtrading the day that you're winning, because the day that you're winning is the day that, you know, maybe it's gonna be just more in your favor, so you can get more back-to-back wins, if anything. Winning. I win here and I win there. I'm by winning. Yeah, today is best to let gold go. It's again doing the same after the breakout. Yeah. It also get, look at this, another kiss of death. Yeah, so that's exactly what it is. Now you know exactly what the kiss of death is. See, it can happen on any time frame. Got it here happen again on the 5-minute. Look at that. Right next to that wick, and then see how it like pops back up. Tiger blood. I need to bring my tiger blood back on stream. We used to have this drink over here. We called it tiger blood. Then we used to drink it, and then we used to have bomberclot trades.
Bomberclot!
Like this. Tiger blood.
Saying that you're mom's fault. Shut up. Shut up. Stop. Move forward.
Have you had any celebrities reach out to you to try and help you?
Yeah, like radical people like Sean Penn and Mel Gibson and Colin Farrell and just radical people, and they're not telling me what to do.
Who gave you the best piece of advice?
Well, they didn't give me any advice, and within that, there's great advice. It was just love, and so you know, just to like, oh my God, it's all my mom's fault. Shocking. I win here and I win there. Madison, make me like them. Wow. And then what? What's the must? What are you of? I mean, they're entitled to, I suppose, interpret stuff as they must. Some are of.
Some are saying that you're bipolar.
Wow. What does that mean?
I guess that you know you're on two ends of the spectrum.
Wow. And then what? What's the cure? Medicine? Make me like them? Not gonna happen. I'm by winning. I win here and I win there. Now what? If I'm bipolar, aren't there moments where I crashes and it's like in the corner like, oh my God, it's all my mom's fault. Shut up.
Man, Charlie Sheen's so awesome. It's a shame what happened to the man. But it's definitely recovered quite nicely. It was so funny. So funny. By winning. Yeah, it looks like the 50-minute candle here is stuck in between our 8 and 50 SMA. Still very choppy. Let's see what something else is doing. Let's watch like NQ again. Hey, the ticker changed. How did it change? Oh no, that's not 100. Oh, okay, I see. It's currently is still bullish on the daily. We got some support if price breaks below. This is what 24,827. Some small range here, but I think like what you want to see, because it's already moving up. It's more bullish, so you kind of want to look for those buy continuations. In my opinion, maybe even get a potential fake out confluence below 24,826 to close back above that resistance right over there. So sometimes, you know, that's a really good play. Like whenever you notice or spot the direction and then kind of just anticipate a fake out below here, then that's gonna get some orders in. So you get price come down like this, and then next candlestick break back above, such as that. And then, you know, sometimes when you actually just wait for the move like that to happen, it just feels a lot more better when it comes down to execution, correct? Like when you're just anticipating the fake out, then you get entry confirmation with it. because they're not about like a sell, because it's about to close here in about like 50 seconds. Gonna close below 24,828. Then next candlestick's gonna open up like this, and then start re-breaking the lows. Gonna try and move down towards that support, but yeah, I would rather see like some kind of liquidity grab, especially, you know, like what's happening on gold today. When you spot like there's a lot of these pullbacks happening, then you get like a wick like this, and then you get your entry such as that. It's a really, really nice confluence. We took a trade like that once on stream before. It was price was moving up bullish on gold, and then it set up a sell. We did end up taking the sell, but we saw that we were counter trending. So what happened, like we closed the sell at break even, anticipating that was going to be the fake out, and then ended up taking the buy, and you know, then the buy played out beautifully. Really nice. It's kind of like the same idea of what could potentially cook up right over here. So it just depends on how the candlesticks are about to close. By winning, I win here and I win there. Small liquidity grab here, 15-minute, taking out the low. But the candlestick is still open. Candle is still open. Yeah, it's opening up now as well. Like you see the volume starting to kick back in properly. So this is looking a lot nicer. It's starting to mop up areas, but I'm not too fond of these pullbacks. These pullbacks look quite volatile, quite aggressive. Look at that. Look at the way it just pulled up again. Right here. That's crazy. That's crazy. It just broke and then did about like 40 pips and then completely just pulled back up. Yeah, it's a bit volatile today, I would say, market conditions. Generally speaking. No headlines of the weekend, so nothing much to look out for there. I believe this is just normal PA. Only catalyst is that USD bank holiday. And the fact that we don't have anything really to bolster the price of gold. So it's just broken into a phase of what we call waiting. A phase of waiting. I'd say good prices for people who are buying on gold would definitely be above like 51.25. That's when they get a bit more confirmation. If we can get a rebreak of those highs. See on the 1 minute, nice little accumulation. It's those are the pullbacks which are making it quite tricky. You see, like even right here, high break broke below and then pulls up like this, broke below and then pulls up. See how big was that? At least break of the wick close. So it was a little bit more forgiving, about like 20 pips. But I don't believe there was any real entry confirmations right over here. Oh, so NQ actually decided to just fill the range. It didn't, man, even without a top wick on that too. Closed right at the support, which is also quite annoying because look at this. Look at how perfect that is. It closed right at that support level. Right over here. Right at support. Next candle open, no even top wick. Just completely melted through that zone. It was an accumulation breakout because on the 5 minute there was no candle closes. So yeah, I think maybe somewhere around here. That's actually the trade that we took on gold. This what happened right now on NQ. It's the same trade we took on gold, except like the variable is slightly different. Like you can see this area here. All right, let me change the color. You're gonna draw. I'm gonna draw it for you right now. You're gonna see it. We're gonna draw for you. It looks a lot cleaner on gold spot. On NQ, it requires some bit of imagination, but you gotta see it like right here. So you see what happened on gold spot? This is the same thing that happened on NQ. I think like this candle here, if it pulled up a bit more volume, then you'd see it a lot clearer. clearer, but it's pretty much the same idea here. The same idea that I took this sell is the same idea that this sell could have been taken here on NQ if you're looking for sells, that is. That would have been the liquidity grab there by the highs, such as the one we got here on gold spot. And then break of the low, you see, break of that low over there, and then get volume coming. So this essentially should have been, or rather this was the reaction that was expected of price when executing here on gold. You see kind of like a different market context, but you know, pretty nice. And Q1 played out nicely. This one could have played out just as nice too. That's the thing. So whenever you execute, you're like imagining. You're imagining how the trade is going to play out. So whatever the outcome is, you don't feel that, you know, you've missed a trade. That you talked yourself out of a trade. Because you've already done the back testing, right? We've already seen that happen enough times for us to execute without second guessing much. Boom. Same thing here, NQ. But this was more of like sells, looking for buys. Because the daily bias was still bullish. But we are going into pre-NY now soon. In about 25 minutes. But it's nice. You know, it filled up the range. It came close to the SMA as well. So it did what it was actually meant to do. It was meant to break below that support and then fill up the range. Which it essentially has done. Now the next range it's going to have is going to be above 24,832. 218 pips. Spotted something and posted on Discord. Nice. Let's see. Secured 14 pips with 3 pips slippage and going against the session bias. Ah, nice. Yeah, session bias today was, looks like that was not working. You got liquidity grab, break above the high, confirmation. Very good. Buy, awesome. In and out. Trade Bro EA. What is a Trade Bro EA? Yeah, but you got like little accumulation, small manipulation, push to the upside. Enjoy JT. Breakout, retest. I think we need some more detail. Like you gotta go on a lower time frame. Because I don't know, like, where is this retesting? How is this a resistance? Price is above. So how is this a resistance over here? I feel like your chart work could do with a little bit more development for sure. We got a support area down over here. I see it. But yeah, this is not looking good. The first trade was taken on the 3rd of this month. And the second one was executed today, both during pre-London session. I was also closely monitoring a third setup during the London session as it was shaping up a very similar scenario. Oh yeah, I see it. This one was nice because it came down. It came down and then you had that like valley to play in. Please, Mr. President, just one more bull run. Promise to take the profit. Oh, this is for Bitcoin probably. Because Trump was pro Bitcoin in the beginning, remember? And that's kind of like what was making BTC go up as well. Wall Street, back to business as usual. Here comes NQ with a closure above 24,833. Wall Street set for muted open as markets assess softer than expected inflation data. The important takeaway for both the rate markets and equities is that the trend is disinflation continues. It kind of reinforces the idea that we are past peak inflation concerns, said Michael Metcalf, head of market strategy at State Street. This is painting a picture of a continued improving inflation outlook, which I think will allow for rates to fall later this year. Got the next FOMC in about 30 days. Yeah, still pretty strong at no change there, 92%. Doesn't seem like anything has really shifted here. Easing 65, June 75, 79, July. Nothing much shifted there. Same old, same old. Just the same old. But if you feel it, like if you feel that there's a lot of like waiting right now, I think that in itself is like an intuitive skill that you are developing, that you don't develop necessarily working towards like really, that's more based off experience, right? Because you, most of the time when you're trading, you're more focused on just the technicals and like the hard evidence of like, you know, the news and forex factory and strategies and all that. You're more focused on the hard skills, but you're developing soft skills right now as we speak, you know, as you're learning the different sort of like sentiments and how price moves and how we are all looking at, you know, overall market conditions, especially what's anticipated with the FOMC. Those are really important soft skills to learn as well. I think people just always, they're rightfully so to be focused on the hard skills, but yeah, I think the soft skills also don't completely ignore those. You'll be surprised that a lot of profitability in trading is just waiting. Like some of you already understand this, some of you've yet to understand this, but every strategy is to an extent profitable, correct? It's just your ability to have days that you're not willing to trade that sets you apart from losing traders overall, correct? Just knowing how to just spread out your risk. Think about it that way. Like that's what I do. Spread out my risk. Pre-London 1, London 1, pre-NY 1, if I'm going to end up taking 3 trades in a day. Now I forgot how to do this S thing. Y'all remember how to do this S thing? Good enough. All right, so candlestick on NQ closed above resistance. So gold is rejecting that resistance, that support by 5,004. Here at NQ looks like close above, created quite a healthy bottom wick as well. Really be expecting once this thing like reflips and breaks the highs, see that range there get filled. So I guess it would still kind of be like the same idea that we're thinking about here as a fake out below for a candle to close above and then continue to move up bullish. The only thing is like quite forgiving on the sell below because it pushed quite a lot. It pushed quite a lot to fill this range. But I guess it would still be the same idea. Candle close below like that support level, create like a fake out. Especially after creating such a healthy bottom wick like that. It's got that SMA confluence. It's got that daily bias. It's got a clean range. I would really be expecting that volume to kick in once it breaks above 34,841 over there for that reflip. Healthy bottom wick. Whereas gold spot is it's dipped its toes in this area, which is good because it filled the range. It did what it was meant to do. Definitely 65+% of the range. Oh wow, okay, not even. We came pretty close though, but not yet 65. About like 4.6 pips away from that 65 mark. See if NQ can pop back up. See what it does over there. Since I already retested these lows. But overall, the PA on NQ for me looks quite nice. It also created like some inverted here, inverted head and shoulders, little fakey, liquidity grab below that area, and then saw it re-break the highs. Overall, the PA on NQ does look quite nice to me. It looks appetizing to me. If that was the same case like on gold, would have been more favorable because it's kind of like swinging a bit more. It's not trickling. It's swinging, so it's a little bit nicer PA. Whereas on gold spot, still being a bit cautious here. I do want to take another trade. I see it's broken into an accumulation. We have resistance, and then we got support resistance, and it's stuck within this range. So you got like range high. Right here, you got your range low. See what it's trying to do here with that liquidity grab. What it looks like a liquidity grab below. Maybe it's for this accumulation to break the highs. I believe if we break those highs this time round, And that's going to be during a pre-New York time. Ideally, we would have seen like a strong push, but given that it's a USD bank holiday, during that time, we're going to wait and see because the daily flip isn't too far once we re-break the highs. It's only about 204 pips, which is relatively light work because we've seen candlesticks do like 80 pips on one go. So 200 pips is not that much. Like you can see here, for example, that breakout was about like 90 pips. 90 pips. So you'll be surprised how fast we can get up towards a daily flip, especially once you see that volume start to kick in. See, taking one more, my 80% hit rate set up on German 40 come up at BE already. Close. I love German 40. Oh, nice. Took a buy. Okay, looks like NQ is also still not moving too much. Broke the highs but came back into the gulag. Let's see what DAX is doing. Let's go on here. German 40. That's a move that you caught. 5-minute break. Clean range on the left hand side. It's like a market fade setup. Price calm down. Boom. What time is it? Okay, no. Daily bias is currently still waiting. It's like a market fade setup here by 24,913. Break of the highs to move up to fill this range. Very good. Like 19, 20 pips. Now he's got another range here that it could continue to fill. About like 30 pips. This is overall markets are choppy, right? Look at this on German 40. Overall kind of consolidating market conditions here. You got resistance, you got support, little bit of sideways movement, small liquidity grab above the high. But overall a thinning out of volume for sure. So broker here is creating a lot of gaps as well, Pepperstone. But overall thinning out of volume. 4-hour looks clean if it can reflip. At least 4-hour range to get filled. A lot of nice 4-hour ranges on silver, NQ, and gold. To the upside. As well. But let's see 30-minute. Yeah, like 28 pips towards 24,970 over there. And just create some kind of breakout from this area. Candlestick clear close above, but it didn't break the previous candle highs. Now it's like pulling back in. I love German 40. Oh, nice little breakout in the 1 minute as well. From the market fade. There's a market fade and small little breakout. Liquidity grab as well below the lows. Then like broke out. A little bit of drawdown. Let's see how much drawdown this is. But like 9.6, 9.3 pips of drawdown before it distributed to the upside. See, like price came down, then set up. Boom, break of the highs, and then started moving up again. Nice. Yeah, loads of confirmations there. What did you say you took it? Sub jump 40 came already. PDO PDC. Very good. Yeah, but definitely got a nice little confluences there for sure. High probability zone. I would actually say, what did she say? German 40 is cleaner than NQ. It should be, right? To me, it seems like it. It seems more respectable somehow. Like the price action, just looking at it like this as well. NQ for me has just been a thing I just look at because people trade it. But to be honest, I don't know. As far as I'm concerned, I don't know. I don't know much about like. I feel it's like a hit and miss, you know. That's what I feel like with NQ. It's like a hit and miss type of thing. That's why I don't. I look at it here because people traded. It's kind of like the same. You know what's happening right now with NQ? It's the same thing when I started in 2020 trading. Everybody was looking at GJ during that time. Why we're looking at GJ? I don't know. Because our mentors were looking at GJ, everybody was looking at GJ. So we all just naturally gravitated towards GJ. It's the same thing that's happening at NQ, but now I see it. I see that it's just been looked at because many people are looking at it. But it's like a GJ of 2020, where it's like we knew GJ was slow. It moves slow, and 2020 was not really the greatest time to be trading GJ. Honestly, the price action was not the best. We had a lot of fisheries, a lot of hawks happening with Bojo, and these things were all affecting price action. But people were also losing at the same time on GJ. But we were all still in the communities that I was in. We all still traded GJ, even though like it was not the greatest. So I think NQ has become like the GJ now. But GJ is moving good. At least in 2026 so far, GJ is starting to shape up quite a lot. Man, 2025, GJ was giving whips the whole year. The whole year was giving whips. Low volume. But yeah, this year, pound is really starting to come back alive. But yeah, we can look at NQ, and let's bring on German 40 to the top of the leaderboard here. Let's put it above NQ. Now NQ is the bottom and German 40 is the top. And gold is the top of the top. Let's see. German 40, beautiful. What do you say? Yeah, during London for me it's better. NQ is better at NY if you look from HCF. To TFX entry on the LTF, you can get big moves. Last week, Monday to Thursday was so clean. Yeah, maybe that's the thing. Maybe I need to look at it during another time, probably. It would make sense for German 40 to move during the London session. So that's a European Open. Yeah, I do like the PA on that. I see some nice little breakouts distributing over here. Nice little sell-off, still a head and shoulders situation. Maybe a double top accumulation break there. Another accumulation break here with a pullback first. Pullback down the 5 minute. These are 5 minute breaks though. I think I need to get better. Let's see, German 40. Change from Pepperstone to something else. Yeah, let's look at forex.com. And then we can add that onto the watch list. Forex.com. Let's get rid of Pepperstone. I got my peppers. 5 minute was a BOS retest, the buy. TFX, you lack something, you're finding entries too much. What do you mean I'm finding entries too much? I'm just paper trading. I'm going back. I'm back testing as well. So I'm looking back at trades which played out. I don't know what you mean. I'm also a day trader. I trade on the 1 minute, the 5 minute. Every hour candle for me is giving me at least 1 or 3 setups. So each time I wake up, I come onto the chart. You're going to see, like, even with my trades, right? They're always coming. Look at this. This is 1:06 a.m. That's pre-London, yeah? So keep that in mind. I take one trade during pre-London. That came in. I'm always on the chart at the same time every time because there's going to be a setup for each hourly candle happening at that time. That's 1:06 a.m. That's 1:11 a.m. This is 8 minutes. That's 8 minutes past 1 a.m. There's 7 minutes past 1 a.m. 8 minutes again past 1 a.m. There's something very specific I'm looking for. It's not that I'm finding too many entries. The thing about the market is if you got to be on the chart the whole day, you can trade. It's open 24/7. If you want to trade even the weekends, you can trade cryptocurrency. But the trick is like to pick your time and during that time to know how those hourly candlesticks move. You know, how do they push? How do they move? What's the probability that they actually follow through? They give you follow throughs. And then your job is just to secure one trade per session. You know, ideally one trade a session, and you call it a session. Then you got to build that discipline to not overtrade, right? Because the market's open. It's like a casino. You can trade whenever you want to trade. Do you know how many fair value gaps you're saying? You're saying I have like too many entries. Man, you know how many fair value gaps are playing out here as we're speaking right now? Especially if you want to start trading the seconds chart like the ICT guy does. He trades the seconds chart. You know how many trades you can be taking right now? A lot of trades. But you see, if you understand that, I think then you understand what I mean. But if you're a swing trader, then you see the reason why it looks like a lot of trades for you is because you're too used to that higher time frame. So you got to wait longer for your candlesticks to close. Whereas lower time frame traders, we don't have to wait that long. So I mean, the only difference between a higher and lower time frame is the candlesticks just take longer to close. But market structure is market structure. It will still play out the same way. You're not escaping anything. A lot of people are under the impression they're escaping something. They're not escaping anything by trading a higher time frame. Market structure is market structure. And like, trust me, the market is so smart, you have no freaking idea. You think you're gonna get away with like higher time frame? You're not. The only way you're only gonna give yourself a bigger edge on the higher time frame is, first of all, you're trading loads of capital. Because, you know, people trade a high time frame, and like people who are quite wealthy can drop in 50 million just like that. And they're not going to be able to scalp like the way I scalp. They're going to be moving the markets. These people are very wealthy people who they can't trade the way we trade. They need to get filled in by brokers, right? Because they can't just buy. Because it creates slippage. There's a lot more technical things that go into it as well. And those people use due diligence to couple the higher time frame with the amount of risk that they're taking. But you, just as a retail trader, if you're trading the higher time frame, thinking you're going to draw a trend line without doing any due diligence, risking about $100, like, it's not so nice, because, you know, you wait longer for your trades to play out. You build character a lot slower. So it takes you longer to learn the same lessons. You kind of learn on the lower time frames as well. Lessons of discipline, patience, market structure, because the market will still move the same way anyway. So if you're getting faked out on a HTF, it just takes longer. That's the only difference. The only thing that scares people about LTF, they don't know how to trade. So in the beginning, as a new trader, using wrong lot sizes, miscalculating the lots, playing around with the lots too much, getting caught in dumb shit trades where it's like about to reverse, but that's when you get in just as it's reversing. So it goes against you much faster, and you lose a trade a lot quicker because you're still learning. So you sometimes get in like really silly positions that just go straight against you. That's the only thing about the LTF. That's why you must approach it slow with good risk management and just focus on the skill, which is reading price action. But risk is risk. There's no blankies over here that you're going to use, like, you know, a comfort blankie and say that, oh, your trading strategy should give you less entry confirmations. These are things that, okay, it's good to focus on entries which don't always give a signal. I 100% agree with you, especially if you're doing shotgun plays on a 1 minute. That's going to be too many signals, right? It's like too many falsehoods. So it's important to find a balance. But definitely, like, if you're trading anywhere between the 1 minute and let's say even like 15 minute, say 1 to 15 minute, definitely each hourly candle can give you a potential move at least. So your job is to figure out which ones to take. The higher you go up, the longer it takes, the less signals that you get. If that's also what you want, less signals, then just go up higher time frames, because you gotta wait hours for candles to close. Yeah, I think that's it. Look at entry times. I always use grabs as confluence, always, then use structure on the 1 minute, 5 minute for entry. Yeah, I see this consistency of entry times also important. 8:50, 9:20, 8:05, 8:15. Damn, 8:15, 8:10. It's almost like you're waiting for that 8, just between 8 and 8:15. 8:10, 8:05. Very good. If it happens naturally, that's good. if you're looking for it and you're forcing this time, that's another story. You know, if now you got in your head that it has to happen, let's say 15 minutes into the session, that can also be risky because you can push yourself into trades that you shouldn't be taking. So just let it happen naturally and then look back at it and say, oh, that's interesting. And then every now and then you're going to look at it and then kind of like anticipate it. You know, just anticipate the signal to come during that time. And then when it comes, beautiful. You fucking take advantage of it. Because that's your window. That's literally your entry time. It's when to enter the bank and rob the bank and get out. See, so maybe the guard here, the guard has been going for a walk during this time, specifically here. So it keeps going for a walk. That's your entry time, in and out. And there's certain cute clues left behind, like you've seen from some of the trades we've taken. No, I don't force the trade. I only trade from 8 to 11. Today was very close to not taking any entry. Yeah, now we got a candlestick on gold spot close below support here by 55,004.22. I think today was destined. I was going to take a trade. There was no two ways about it. Unless I skipped stream and said, it's a bank holiday, let me chill. But this is more of the more aggressive bank holidays, because the other bank holidays I traded were fine. But definitely this one feels slightly a bit more aggressive. I feel like if I take another trade, I might put myself in a double loss, because remember, like, losing clusters are normal as well. I might put myself in a double loss. So I really gotta think. I'm already up for the month, like 37% though, so it's a house's money at this point. These are fun coupons, because the market's been quite generous of late, especially this 10.30% trade. I didn't expect that to. It's been quite generous. It's just slowly going into a phase where it's might expect some more slowing down, just like any business would in the real world. Nothing different. So we gotta see what we do. Now patiently waiting for 49.96. In total, 3 trades, 2 profits and 1 loss. Let's go. On a day like this, amazing. Yeah, most people would take that 1 win and call it a day. If I got that 1 win, I would call it a day. But now I'm in a position where I want to take another trade. Look at this shotgun play here. It's trying to push up, but you see that's the fluctuation right there. You see that? That's what I mean. That's the only thing keeping me away from taking another trade. These pullbacks, like, sure, okay, like goes in your direction. Like you see also on the trade that I took today, it started going in my direction, correct? So I was like, okay, you know, light work. Let's see this thing play out. But then it stopped. Then it stopped going in my direction here, like 14 pips. And that's the thing that I think can happen if I take another trade. I have a feeling that's what's the market condition today. Doesn't even matter if it's going to be a buy now anymore, because we're getting into a pre-New York time. The market structure is shifting. It's going to go into profit, then it's going to stop. And man, when it stops, just gotta smile and wave, boys. Smile and wave. Never a good sign when the market stops. It's never a good sign when it stops, when it's heading towards take profit. Few things might be cooking up at that point. Either there's just no orders for continuation, or maybe in some cases it's already profit taking that's already occurring. It's now you just gotta risk on, you know. This is like what happened here. On the 5-minute candle close, broke the lows. It was supposed to actually follow through nicely over here. It was supposed to just follow through once started re-breaking, but you see it pull back up again. So there's still a bit of some kind of a hesitation here. You don't need no order block indicators or anything of that. You could just see it in the candlesticks. You know, come on, man. Just read the candles. The hesitation nation. Look at that. Break of the lows and then starting to pull back up again. See if it can follow through properly. It's meant to follow through. On a good day, this thing could follow through on this candle right here by 607. Because there's some kind of an entry confirmation there for a sell. But let's see. How much did it push back? Now it's like 17 pips. All right, let's see. Let's see if I would be taking out a break even on this. But you see, as we're coming into a new session, you see this pre-NY, the variables are shifting a little bit more. That's why it's important to always spread out your trading. That's why I'm still considering taking another trade, because I know the variables are going to spread out. It's going to be easier later. You see, now it's like following through a little bit more respectfully. What we had before was a real disrespect, a violation. It was a violation of the terms and conditions. But now it seems like price is respecting terms and conditions. Yeah, it's been pretty good. All right, that's giving me a bit of confidence back in. You know, when you see price behave the way it's supposed to behave, you're going to feel confident. You're going to feel confident, take those trades. But until it does that, you don't want to trade, right? Now patiently waiting for 99.6, 49.96. Candle close in 5 minutes. Yeah, this is already in motion now. It's heading down towards support here by 49.98. This is the range it's supposed to fill. Sorry, I took an impulse buy when I tapped the 5K and took impulse exit when there was an upside spike on 5009. I took 2 profits, one during Tokyo Open and second during London Open. I think you're down for the day. If you take like 3 trades, 2 profits and 1 small loss, why wait for another trade? But anyway. Tradeboard tool helps you calculate your position size of orders quickly. You no longer need to count ticks or do time-consuming calculations. Very nice. It just sounded like you read this off the, you know, on the tool description. But yeah, no, that's really good. It helps you calculate the lot size. It seemed like one of those advertisements. You no longer need to count ticks or do time-consuming calculations. Get the Tradeboard tool today. Now that's the only thing I don't like about changing my lot sizes too often. It's always that error. Is there always room for human error? There's always room for human error. So yeah, I don't like that. I don't like the idea of me putting in the wrong lot. So I use 2 lots. I only change 1 number. 2 lot sizes, I just change 1 number. Get it now while stocks last. Hey Vic, would you consider moving to Dubai? No. I don't really like the idea of living in Dubai. It sounds good for like business, tax purposes and all of that stuff, but quality of life, I don't think I'm gonna really enjoy that quality of life there at all. It's too superficial. I like things that feel, you know, like where I live, I'm next to nature. I got nature. I got so many things. I got the ocean. I got game parks. I got animals. I got trees. I got it's not like dry. It's the weather's perfect all the time. Like what, 25 degrees, 30 degrees Celsius. Like it's nice, you know. People are nice. It's it doesn't have a very cultural things that laws that you gotta follow and all of these things, you know. But like Dubai is definitely a different vibe. It's a different vibe. Yeah, for me that's, yeah, I think I want to visit Dubai 100%, but you know, I can't talk shit about it because that's what they do. They're gonna see me talk shit about it online, and then I'll land in the airport and then I'll get arrested. Hey, that's Dubai. You see all these influencers? Man, they're so scared to say anything bad about Dubai. Because they're gonna get their passports or something taken, you know? Some sheikh is gonna say, hey, Habibi, this guy with 1 million said Dubai is not nice. You know, they do that. They pay those influencers to go and say nice things about Dubai. It's too much stress. You can't say anything bad about Dubai. Like, you always put yourself in a very tricky position, you know? Scary. Scary, man. I don't like that. Why no influencer says anything bad about Dubai? Why are they so scared to say? Because it's not perfect. It's good. It's good. Also, like buying and shopping. If you want to go shopping, and I think like people who move to Dubai also come from like really shitty countries. You know, like, so for them, Dubai is also quite different. It has a lot more to do than what they're used to. But I've always had the privilege of living in countries where there's always been plenty to do. So I just don't see the need. And it's also about comfort. Some people feel comfort about Dubai because it's a little bit, it's more safe in the sense that it's a little bit more controlled as well. So it's harder for them to imagine other areas just being better. I don't know. Let's see. This range here has been filled. Now we had the shotgun play. It's shot from here. How many pips is this? Like 41 pips, 42 pips. Yeah, we got 42 pip move to the downside. And that's it. That's the range fill right there. But I'm happy to see that the PA is coming back alive. However, there is a lot of fluctuation here that I'm still quite cautious about. A little bit of fluctuation as we're heading over to New York Open. Yeah, I'm from Wakanda. I'll give you a hint. I'm from the country IShowSpeed in his tour loved the most. That's all I'm gonna say. There's a reason why the biggest IRL live streamer came to this country. Until this day, he still wears the band all the way from Ohio in America. He came to this country. He still wears the wristband. And he still says like, holy, that's a fucking country right there. That's a country right there. Man, IShowSpeed came here and he was so happy. He was so happy. People who come here, they're always going to leave happy. And he's still wearing the band, which is really nice to see. What did he do? Like, what did he recently do? Oh, he's back on. Dressed like an old man for Valentine's. Sui. Dude, he came to this country, bro was crying on that stream. Bro was crying. He couldn't believe it. He couldn't believe his eyes because his whole life he lived in an environment that was a completely different environment than what he's used to. So he could not believe his eyes, man. Bro started crying, and up to this day, he's never gonna forget it. He's never gonna forget it. Those are the countries that I like to live in, you know. So if you know, you know. If it controls all the vibranium. Yes, sir. This is the source. That's where all that vibranium comes from. This is it on the map. Actually, if you watch Black Panther, yeah, and they zoom into Wakanda, it's in the same location. So you gotta watch Black Panther. It's in the same location. But let's see, can price set anything up over here? No, nothing. There is nothing to set up here. Not yet. Nigeria? Fuck no. Oh man, Nigeria is what's some fun facts about Nigeria? It has the most population, the highest population Nigeria I think has. People tell me when they fly to Nigeria it's like very smoggy, like the air quality is not as good. It's not good. Yeah, it's not Nigeria. I would sound very, very different if I lived there. My accent would be so different. But Hollywood loves Nigerian accent. Very nice accent for Black Panther. Oh god, oh. Yeah, I don't see anything forming here. It just broke, distributed, setting up again. Let's see, German 40. German 40 still got that resistance that it can try and break above to fill up the range towards this next point. It's gonna be around 15.3 pips. Nigeria is dangerous even if you're Christian. So many people are killed there every year. Yeah, it's definitely on the... If you look at the United Nations, they also have like that scale. It's definitely a red zone. It's quite dangerous. Yeah, but you know, I guess it's subjective. For somebody living there, they're just gonna view it a bit differently. But yeah, generally speaking, it is not as free as some other countries are. Jokes in Nigerian accents hit different too. The pidgin English is actually quite... I like the way it sounds. It's also like the music industry is really good. The pidgin English and their music together sound pretty nice. See, NQ looks like it just did like some kind of a liquidity grab below here. 24,918. Yeah, it's got a nice range to keep filling up here. It's gonna set up again. Quiet day, chat. Thank you guys for tuning in today. We're just, you know, we're just chilling here, reading chart work. Don't feel too FOMO because, you know, today is still a USD bank holiday and markets are moving, but I always like to just show up to the chart nonetheless, you know, just see how prices are moving overall. Maybe something shifts. You never know. Sometimes on bank holidays, I come onto the chart and price is moving like really nicely. And yeah, then we end up catching really good trades. But today, it seems like we are getting movement, but still iffy. Still kind of like iffy PA, but yeah, you know, just feel Feel relaxed. Don't feel like you gotta trade. Don't feel like the clock is on, that you gotta get rich today. It's gonna take you time. There's no rush. It's gonna take you time. Like if you're trading today and you're in the market to learn lessons today, I think that's the right approach that you should be taking. You know, today you're gonna learn something that tomorrow and for the week up ahead you're gonna use, and hopefully that improves your edge for the rest of the week up ahead, whatever that lesson might be. So right now I'm gonna wait and see what the lesson is. I think there was no lesson so far. The only lesson is sit on your hands, Vic. So that's what the market here told me today. So you got to look at your journal and see what your journal is telling you. Today the market told me, Vic, sit on your hands. You took one loss. Say, okay, awesome, I'm sitting on my hands. I'm gonna sit on my hands. Now the next trade is gonna determine whether I learned my lesson on the first trade. That's what the next trade is gonna determine. So you see, we already have measures in place that can help mitigate some of that risk, which is pretty much just waiting after the first loss and then take the next trade in a time which is going to be more favorable for us. So that's what I learned from my first lesson, from that from when I started understanding the value of spreading out my trades. That was what the loss meant. So this loss meant something different to me back in, let's say, 2020, 2021. It meant something different to me than it does now. It still means the same thing, but now it just like, I just know I have to wait next session and then try again. And if it's a loss again, then I know that the only thing that I could have done at this point was just to call it a day after the first loss. Then that would have been the only lesson left to learn after this, if I followed my rules on the second trade. So that's how I would look at it. That's how I look at every event in the market. Exactly like that. So you don't leave the chart without getting anything, any value. Try and look and see, what could I learn today that's going to make me a better trader tomorrow? Now look at this. German 40 here is moving up. A little bit of a shotgun entry over here. How many pips is this? They'll move only about 4.3 pips for a 14 pip range. That's all that you got to do. What should we do, Ricardo? Should we take another trade or should we call it a day? What would you do in my position? Would you take another trade or call it a day? You said last time, call it a day. Yeah, you said last time y'all was losing these days when I overtraded. I got a good memory here on this day. You said, man, all the time on these days you always take a loss. I'm like, I know I do, but I'm only human. We all make mistakes. But I remember this day over here. Yeah, I think, you know, a loss has so much energy in a loss in trading that it's like your memory is always more active, because these wins, I can't even remember these wins so much. You know, but the losses, they're always going to be engraved in your memory somehow. It's like a battle wound in a sense. You know, like if you look at your body, you're going to have scratches, you're going to have bruise marks, and everything is going to tell like a story of what happened on that day, of the dumb shit you were doing on that day. And I'm like, yeah, man, I remember this day I cut my finger. Learned my lesson. So, you know, now I'm not going to use that same technique to cut things. So I use a different technique now. So that's what your journal is. It's going to show you your scars, and you're going to learn from those scars, correct? It's a lot more potent, and that's what's actually keeping you moving in the correct direction. But if you're a very reckless person, then you know you don't have that sensitivity, then you know it's a lot dangerous for you. Like those people who don't have those nerve endings, where when they get hurt, they don't feel the pain. And that's a very, very risky thing, because their hand could be in fire and they're never going to feel the fire. So they get a lot more damage, those people. It looks cool. It's like a superpower. You know, they don't feel pain. But it's also a problem because they don't feel the lessons as well as potently. The same reason why a child, when he touches an electric fence, he's not going to do that again because he knows how that felt. You know, some people, they just don't have that. So they get stuck in this loop of forever gambling and trying their luck because they feel invincible. But eventually the market does enough damage to you that that you will feel it. Even though people have never-ending problems, like given enough damage, they will fucking feel something. Like you should watch this movie. It's called Kick-Ass. It's about this guy who has that power, and he fights bad guys, right? This guy, but he never feels pain. But if he's disciplined enough, he's gonna feel something. He's gonna feel something, you know. But generally, he doesn't feel anything. So some people, they still feel like Kick-Ass over here. Really good movie. You're gonna kick ass until your ass gets kicked. They're gonna be like, damn. But anyway, right now we are waiting to see if markets are gonna be in more V-shaped conditions. This is what I'm actually waiting for. You see, like what's currently happening now. This is ideally what I want to see. It's the same thing that's like on German 40. Like you see how price came down like this, and it's moving like a little bit. It's flowy a little bit more. It's like come down, V-shaped reversal. It's a kind of similar situation like on German 40. You see how German 40 is still respecting PA? Look at that beautiful shotgun entry right here. Build up the range towards resistance. Really nice. And you can see how that PA looks. It's a lot more flowy, right? It's a lot more flowy. We're not seeing any sharks in the water. So that's kind of a similar thing over here that we're waiting for. So we're just kind of ignoring what happened here because this is in the past. Right, that's in the past. So focus on like what's currently happening right now. I'm seeing the volatility is also starting to subside a bit more. The wicks don't seem to be as aggressively pulling up and down. That's also a good sign. But the closer we get into that New York session, that's going to be the real... I think at the end of this day, we're just going to see the New York session didn't really move much. When you have your kill zones on and you do your backtesting towards the end of the day, that's kind of what I would expect. Like maybe a little choppiness like what we saw on Friday. If anything, like maybe not so much direction, but still enough to catch something, you know, because there's still volume in these candles. Like we can see as early as today's Asia session, TFX entry confirmations here. Look at these breaks. That broke like 135 pips. That broke about like 87 pips. So there's still something. Is he that I'm just gonna be right about the trade or wrong about the trade? So you know that's the worst that can happen. It's not the end of the world. Say you're gonna talk to a girl. The worst thing that she could do is say no, right? The worst thing you could do in trading is take a loss or take a win. It's not the end of the world. So you just gotta come back tomorrow and practice a good discipline. That's all. But give yourself a shot. Give yourself a chance. Don't over trade a certain area. Give yourself a chance for the market to open up. Did you see that thing on the what is it, the Epstein files? Apparently, like how many files were released recently? Like 3 million here in the U.S. Department of Justice. 3 million files were recently released. How do we open this? Oh, did I click no? I meant to click yes. When it asked me if I'm 18. Oh, damn it. Say no. Yes. Verify. Oh, it's not loading. Why is it not loading stuff? Dataset files. Dataset 1. Dataset 12. Dataset 12. There's this interesting trick I wanted to show y'all, but I don't know if it's gonna work here. Ooh, I think I found it. Is it? No image. Apparently there's a way. I already did this once. I don't know why it's not working again. But there's a way to change some of these PDF files into videos. That could be anything. It could be like if it's about him in prison, it'll show like a video, like a 1 hour long video of him. I mean of the prison cells. New York City Police Department firearms license and permits. It's just crazy how much information that the police department wants to get from you, or the government. They got all this information on you. But yeah, anyway. I think I'm gonna head out here, guys. Alright, the volume does look good. It looks like it's opening up a little bit more. German 40 looks like it's setting up. So if you're gonna be trading German 40, I would recommend maybe some buy positions. I think there's gonna be really good buys above 24,947. There's a range here that's like 28 pips. It's accumulating. It's gonna break out. It's most likely gonna break up towards the upside, I would imagine. The downside looks a little bit more difficult for price to get through those levels. You got like a support here. You got another range right here. So I think if it starts breaking above resistance on German 40, man, this looks a very clean move. I wish this was gold. If this was gold, even like an impulsive buy above 24,952 would have been good. For price to like just go through this level and then continue to move up bullish. But remember, it is a bank holiday, so just trade with a little bit of caution. And you should be good. I will see you all tomorrow. Adios, everybody.